How's it going, everyone? Richard here from Hola Prime. Welcome to the morning session. Joining me today again, Troy and Tiger. Same as yesterday. How are you doing, guys?
Excellent. Hump day.
Awesome.
Here we go.
Yeah, I'm day. How's trading me treating you? Did you get any trades done in the PM session? Late morning session?
Yeah, just still in that gold trade I opened up yesterday.
That's good.
No.
Yeah, I was pretty bummed out. Just got stopped on that crude oil trade and then moved downwards. So
Yeah.
whatever. One of those days.
That's the way the cookie crumbles sometimes.
Yeah. All right. So to all our viewers, thanks for joining. If you've got any questions, as always, please just drop them in the chat and then we'll respond to you guys. These sessions also will be recorded. So if you do miss them, they'll be available on the YouTube channel within, I think, a few hours after the last session. So yeah, you can always go and catch up with that. Anyway, Tiger, you want to take things away for us? Get things going?
Sure, absolutely. So
Awesome.
yeah, I mean, really, my watch list is kind of similar to yesterday's. I have added a few other items. Really, the top ones at the moment, very similar to yesterday: Euro, Aussie dollar bullish, and then Canada dollar, Japanese yen bullish. So that as far as the currencies go, I've got a couple indices, and I've even got Bitcoin back on my watch list because of some recent fundamental moves. So I'll take a look at those on the charts, but. Yeah, as far as yesterday, the German IFO, they did beat. They had that 88.4 versus an 88.1, and plus Lagarde flapping her lips in her speech. So got a little bit of euro strength going on at the moment. And then for the Aussie dollar, the consumer price index was expected to slow to a 2.3. So that was a miss for the Aussie. So yeah, adding up all of the fundamentals and the sentiment, that's currently my number one setup, fundamentally and sentimentally. So,
Gotcha.
and then I'll take a look at that here in a second on the chart. And then for the Canada dollar, Japanese yen, the Canada CPI, that was another beat. Supports the BOC hawkishness, and yeah, Jerome Powell's going to be flapping his lips again today. So we'll see how that affects the Japanese yen, if it weakens it or what. But yeah, that's always a fun time. We get a lot of nothing burgers out of him. He's really good. He's really good.
And lots of flapping.
Really good at kicking the can down the field, down the.
Yeah, I don't know what did he say yesterday. I think they watched the June and July inflation figures and see if there might be a rate cut.
Yeah,
at a later stage. Yeah,
the
expecting
mites.
tariff
If ifs
inflation.
and buts were candy and nuts, we'd all have a Merry Christmas, right?
Hey, on your yen, did you see that the prime minister or whoever from Japan did not attend the NATO meeting?
No.
I read this morning. And I wondered if this affected the yen, because you mentioned the Canadian yen and that was he sent one of his underlying secretaries instead of going himself, and they said that this was a kind of a shot over the bow, letting Trump know that he was not happy with the trade and tariff scenario.
Oh, maybe that might help
as well as you know, and there's some our military bases are still, in Japan, and there's always controversy around that. I just wondered if that had popped into your yen.
No, I didn't even notice that, but hey, hopefully that'll support the yen bearishness for me. Because yeah, that's the main currency I'm looking to sell right now. I mean, I've got that on 4 of my pairs as far as sales versus the euro, the Canada dollar, the New Zealand dollar, and the Swiss franc actually. So yeah, we'll see how it goes. I did notice that it looked like Trump was in good spirits today, unlike yesterday. So
yeah,
we'll see how that. Yeah, no F-bombs today. It was all kind of jokes. Yeah, not yet. Yeah, the day's for me the day's young. It's only 8:00 a.m. So. But yeah, let me just flip on over here to my charts.
Okay.
And I'm going to first flip over to my broker chart. Let's see here. Percent share screen. Got to figure out how to make this quicker. All right. Okay, so first, this is that trade I opened up yesterday when we were live. Look at that. I mean, it just touched it perfect. It touched that same 4-hour zone that I had told you guys I missed when I was sleeping last time. So now I don't have gold currently as a bullish setup in my algorithm. When it comes to adding up all these fundamental and sentiment reports, just to make a long story short, I like to see a score of 5 or higher, and that gives me a bullish signal. 5 to 8, and then 9 and higher is a very bullish, and then the same is true in reverse for bearish. So 0 to 4 is neutral, 0 to -4 is neutral, and then -5 to -8 bearish, -9 and lower is very bearish. So currently on my algorithm, I've got gold as a 3, so it's currently in that neutral threshold, if you will. So if this same opportunity were presented to me today, like if I hadn't hit that zone, then I would just ignore that. I wouldn't have taken the. But since I'm trade, I'm not just going to immediately close it out because I still have 3 items that are giving me. It's still giving me a score of a 3. So anyway, I say all that to say I'm just going to let it ride. I've got a stop loss below that former daily demand zone. If I were to move that to a daily zone, you'd see that one red candle down before the push up. So yeah, I mean, look, it still bounced pretty nice. I mean, obviously you got a little bit of a double bottom trying to form at the moment, plus some unfilled orders hopefully still in there. So if I would have used just the 4-hour zone itself as a buy and not incorporated the daily, then that would have already been about a 3 to 1. Okay,
gotcha.
3 to 1, 4 to 1. So I like to be more conservative personally because I do like the higher time frames. So that's why I incorporated the rest of the would-be unfilled orders on the daily candle. Okay, so that's why I'm just going to go ahead and let her ride, and we'll see how it goes. If we start getting more and more peace talks, that's great for the world. I'm more than happy to make a small loss if it turns against me. So just going to let that trade ride, and we'll see how that goes. Obviously, got my take profit set at the top here. So now I'm going to flip back over to my regular trading view. Okay. So yeah, I'm just going to kind of go through my list of alerts here. Yeah, at the top, we've got let's see here. I'll just go down the list. So I've got the euro pound on here. Now the euro pound is one of those very, very small ATR currency pairs. It just doesn't move very fast. So I went ahead and I put a rectangle around this 4-hour zone right here on the left. Just a refresher. I got the 4-hour on the left, daily on the right. Now I like to use VWAP and I like to use anchored VWAP. So typically what I'll do is I'll just throw it down on the low points and the high points. So like I've got one down here, which actually came out of a demand zone as well. So that was a strong daily demand zone and I believe a 4-hour at one point. So yeah, I went ahead and put an anchored VWAP line there. It's respecting it here. And then it's going right through that zone. So if I were to even consider taking a trade on this one, I want price to drop fairly quick.
Yeah.
Touch that zone, give me an engulfing candle or maybe just a good wick down into it. Wicking through that VWAP line as well. Now I've also thrown a VWAP down at some of these upper points. So like I threw one here and then I threw one up here as well. So that's why you see all those squiggly red lines there. But yeah, they're just more dynamic support and resistance is very similar to moving averages. So I just like that. I know the big banks and institutions probably use it in certain ways as well. So yeah, not really worried about this one up here. It's more these two, and they're crossing right in that zone. So the one thing I dislike about the zone itself is that it is very narrow. So what I would do if it touches it, I would just obviously, bring my stop loss down in this area somewhere, bring it a little bit lower just to give it some more wiggle room, maybe something like this. All right. And just kind of artificially make it a bigger zone. So that's what I'd be looking to do there. But yeah, I mean, you got a lot of things coming together. You got the VWAP lines, the unfilled orders here. Excellent fair value gap coming out of that. I know Rich, you like fair value gaps, so to me that shows strength. And then we got a little bit of a liquidity line, this dash line from my master pattern tool that I use. That's a little bit of liquidity below that line. That's why I got that dash line. So yeah, ultimately I'd like to see the banks, take my projection tool here, push down, collect this liquidity, and then ultimately hit the unfilled orders for a buy to the long side. I'll probably be real careful on that because, again, it does move like molasses. So probably just something small, 0.1, 0.2%. Get in the game, and we'll go from there. So
you got an alert set just above that zone, right?
Yeah, I got it right there, right on the touch of the proximal line of the demand zone.
Okay.
Proximal, and then the distal would be the opposite end of the zone. So let me see. And also, that's given me a bullish score of a 5. That's just barely in my bullish wheelhouse. So again, small risk, but we might as well take a stab at it, right? So,
and that algorithm that you run, that you talked about, giving you that score, is this something you manually do, or is you just feed it with a lot of data and it spits out a number somewhere?
It's with another company. Yeah. Okay. There's some guys in Atlanta, Georgia, that they're computer programmers, and they've put together an algorithm that just incorporates all the info for me. It's something, honestly, I've been looking for 10 years because historically I've always looked at like the most recent report or two, but then as each day progresses, I tend to forget about what happened 2-3 days ago, what report was released. Yeah. So this is
does it look at the COT data as well, or just like economic news numbers, or?
Yeah, so the COT reporting, the retail positioning, seasonality, trend, and then on the economic side, it tracks the GDP, the PMIs, the retail sales, the CPI, PCE, employment change, unemployment rate, and interest rates. So
that's awesome.
All of the main big ticket items that we look for on a daily basis in the calendar. So
excellent.
Yeah. Now I used to just manually do it from Forex Factory, but I knew I needed to figure out an algorithm to put it all together so that I don't have to spend, and it saves 2 hours of my day every day. I love it.
I can imagine. Jeepers.
Yeah, and it's a quick
glance. Work to do all of that manually. Goodness.
Yeah, it's just quick, at a glance, look at it, and now I can go to the chart to see if I can time a trade. So
the higher the score, the better sort of like, let's call it A+ opportunity it would be to take trade.
Correct. From a economic and a sentiment point of view, yes.
Okay.
And then obviously we got our own scoring on the technical side. And then obviously the lower the score, the better if I'm trying to short sell something.
So does it give you then a bullish or bearish sentiment as well? Or you just then, okay, this is the sentiment, bullish, and then you go mark up your charts. These might be the areas I'm interested in trading with the bullish sentiment behind me.
Yeah. Score 5 to 8 is bullish. 9 or higher is very bullish. So obviously I'm looking for the higher score, whether it's on the very bullish side or very bearish side.
Gotcha.
Yeah. So
interesting.
If I skip on down here to the Aussie Swiss, that's another one that's a little bit light on ATR. It's only 52 daily pips moving on average. I did go ahead, though, and mark up a potential supply zone overhead on the 4-hour. Got a pretty good risk reward all the way down to the next demand zone, which is also inside of a daily. So 4-hour inside of a daily. So definitely I'd be wanting to get out by that point. Plus we got this double bottom here. So yeah, essentially I'd like to take my projection tool and have something like this come up, maybe go sideways, form that contraction point, liquidity here, and unfilled orders, and short sell and buy to cover just before that demand zone.
Gotcha.
So I'll just go ahead and save that there. Bitcoin, I mentioned that. It's really kind of a little bit in no man's land for me on a 4-hour. I did go ahead and draw up a 4-hour demand zone down here earlier this morning. It has kind of broken that downward trend line there. So if I were to look at it even on a smaller time frame, just to kind of zoom in here, I mean, ultimately I would probably be the most comfortable with this 1-hour demand zone down here because I did have some pretty good volume on my VSA indicator coming out of that. So we do have a small hourly demand zone here, but it's a little higher up and it's quite narrow for my taste personally. That's probably perfect for a lot of people, but I just like more. I like to hit the zones, further
More like
down.
a buffer, right?
When I drill down into the smaller time frames, I do like to go a little deeper. So like we talked yesterday, if I'm placing a trade on a higher time frame, just give me a pullback to at least 30, the 38 level if it's a strong uptrend. But obviously, I do like the 50 and 61.8 levels. So, but with the lower time frames like this, I just want to see it like come down, maybe bounce around this demand zone here, ultimately, fail through there, collect the unfilled orders for a buy to the long side.
Gotcha.
So that's what I'd be looking for Bitcoin. Let's see, I'm going to try to keep this for the currencies for the moment. Had a pretty good one on Aussie New Zealand dollar the other day. Now it was also another low ATR currency pair. I did draw up this 4-hour zone. It hit quite nicely and started pushing down because I do have a bearish score on my algorithm. I just didn't take it because again I prefer to trade something that's 80, 90 pips daily movement or higher. That's just my personal taste. I want something to move quick. So, but despite
So you
that,
look at the ATR as well then.
what's that?
You look at the ATR as well then.
Yeah, on a daily time frame. Yeah. I mean, that's just what they kind of taught us in the academy. And yeah, I have seen it. Like, you always learn something, then you want to test the other side anyway. And
yeah.
So I got in a lot of trades back in the day, and they just move sideways too much. So
yeah,
it's just not my taste. I want to drive a Ferrari, not a Pinto. Canada, Japanese yen. I do have. Go back to my 4-hour. Now we did bounce off of that daily supply zone the other day. Okay. So yeah, I just want to see a little bit deeper of a retracement to this zone here, and I think I got that on 1 hour as well. Yeah, 1 hour. Now this is the one I think I mentioned yesterday. We don't really have much of a fair value gap coming out of it, so I would just be real careful if price were to hit it. Again, that might be one where I just use a little less risk. But yeah, I mean, it's still a legit zone. Swiss franc, Japanese yen. So let me see here. Yeah, this one I had. So on this one, I had a Fibonacci from this low to this high, but I also put another Fibonacci from this low to this high. So I see a confluence because the 38 level on the bigger one is also straight across the 61.8 on the smaller one. So I've got a demand zone right below that. So, and I've got a little bit of a former resistance breaking through, potentially becoming support. So ultimately, yeah, I'd like to see it kind of, drop through all that, wick in. Just kind of go sideways like this, maybe wick through up, hit that little zone, and then move, for a buy to the top side. So, because that one, I believe was on a smaller time frame, even 10 or 15. I think it was a 10, 15. So yeah, that's what I'm looking for there. Just, I like the confluence of the two Fibonacci's, obviously different points I'm using that from. So let's see, Bitcoin, New Zealand, Japanese yen. That's another one. Got a zone there down at the 61.8 level. Euro Jap. Yeah, this is one that I've been watching for a few days now. Okay. A lot of these Japanese yen pairs are quite similar on the charts. But yeah, I drew this up yesterday, I think. Actually, I need to delete that one. So yeah, got that one down there on the, 15-minute zone, I believe. 15-minute demand.
Okay.
Right there. Pretty nice VSA candle coming out of it there. Mm-hmm. Okay, so pretty good volume coming out of it. I like it. I mean, it's right there on the 50% retracement. So that's a pretty good level on the fibs. Yeah, that's the thing. Whichever Japanese pair hits first, I'll take it.
Gotcha.
I've got, I think, 4 alerts for the Japanese yen pairs. Now, the silver trade that we, I think, talked about yesterday, or maybe I talked about it on Monday, still, it's the number one, in my opinion. It's just the best looking technical setup out of everything because we got this former resistance point going right through my demand zone, right at the 61.8 level. The 4 hours demand is also inside of a daily. So, I mean, that's just like, in my book, kind of a textbook technical setup. However, silver actually fell off of my bullish bias because on that score I mentioned it's at a 4. So I just need one more good piece of news for gold or for silver, and that'll put me back to a bullish, to a bullish bias, and then obviously get a retrace down to that level. And that's currently my favorite setup.
It looks like you got that previous high there just before April started as well. All within that zone, lots of confluence.
Yeah, it's just perfect. I mean, I don't ever use for resistance support, the opposite side of it, unless it has that zone going through it, and it's just everything. Just the stars are aligning. I just
what's the 61.8 retracement as well there?
What's that?
Is that the 61.8 retracement as well?
Yeah, exactly. Yeah, I mean, it's just perfect on top of the daily if we look at it over here on the daily. So
with a lower score like that, will you then assume if that score would pick up and the price is not in that zone yet?
I would probably still take the trade on this.
Move lower, or would you even like try to short it towards the zone, or just rather wait to see if it gets there and then make a decision?
No, because I do have a score of a 4. It just needs one more good piece of news for it to become a bullish sentiment. So, yeah, it's bullish or nothing for me. I mean, yes, technically I could look at the technical setups on a smaller time frame and just short it down there. But I'm hardcore about following the economics of it. I really am. I mean, if I'm getting a 4,
massive
if it's giving me like a 0 or a 1 or a -1, something like that, then yeah, I'd feel better about using it just strictly off the technicals, like most people, like a lot of people trade. So
do you look at the trend of the algo? In other words, if silver was a 0 and now it's a 1, now it's a 2, now it's a 3, and now it's a 4, it's technically not a bullish, but your algo is saying, hey, it's getting closer and closer and closer to bullish. Do you not take that upward movement as bullish?
Yeah, well, on as far as the scoring goes for all the reports, it's either a +1, +2, or a -1, -2. So like currently for silver, it's giving me it's giving me a -1. So that's just one piece of it. But I like to use everything as a whole. I mean, it's perfectly all right to short it right there, short it down. But yeah, I just do things a little different. I just do it with the fundamentals.
Yeah, but patterns themselves, I mean, if you're a believer in the pattern, it doesn't matter what the fundamentals or the trend, usually you go with the pattern because the pattern itself has a long history that's probably statistically in your advantage, regardless of trend.
Yeah,
or regardless of fundamentals, right?
Yeah, that's true. Yeah, that's true. I mean, because obviously, if we look at it, on an hourly time frame, just as an example, we do have a supply zone up here. So, yeah, it would be totally fine to just short it in that zone. I'm
not saying short it. What I'm saying is that maybe anticipate it moving from a 4 to a 5.
Yeah.
Be where you're preemptively entering maybe early, and so therefore you take a quarter size because you know that it's not quite screaming buy. It's but it's getting really, really close, and I want to go ahead and get in the position or get a small position. Just wondering how you feel about that.
Yeah, I mean, it's quite all right. I mean, I don't normally do it because I heavily focus on the fundamentals. But yeah, from a technical, if it were just technical, then yeah, absolutely. No, that's a great place. And as you can see, it did kind of bounce off that supply and it's kind of going downwards. So, yeah. And that's the way I used to trade. I used to just follow strictly the trend and on smaller time frames. Look at it from because if we're looking at the daily, I mean, clearly it's been on an overall uptrend. So yes, it has pretty deep pullbacks when you go on a smaller time frame, and those are perfectly fine to trade, to short sell. But I just more so look at the higher time frames and just try not to fight the overall high trend, the daily and the weekly. But yeah, that's just the way I do it. So, but yeah, I think that's the main ones. I mean, like I said, I've got quite a few alerts set over here. So just waiting for something to hit. I'll let you know if anything updates while the stream goes.
Cool. Yeah, nothing happening on my side yet. I mean, the NASDAQ is just freaking moving strongly to the upside. What are you seeing there, Troy?
I mean,
cautiously.
Cautiously, it's a breakout. It's a breakout of the bull flag. I mean, from a technical perspective, pattern-wise, it's a breakout of the bull flag. We're above all the moving averages. Like I said yesterday, I feel like we're still in the muck from previous price consolidation. Earlier last year, and that until we can break to new highs, we can't get out of that consolidation band. But I mean, on the shorter, smaller time frame, we're definitely breaking out of this little bull flag, little ascending triangle. This is where you close your eyes and go and buy, right? Because I mean, as I said yesterday, I mean, the fundamentals, the sentiment, all the things that Tiger looks at are screaming the other way, right? They're screaming, we should not be going to new highs. That being said, I was going to say this yesterday and I forgot. There's an old Wall Street saying that whenever this happens, it always reminds me of it. It's the market climbs the wall of worry. Market always climbs the wall of worry. So when there's all this extra stress, it seems like the market wants to climb that wall of worry, which is kind of weird because it doesn't make sense when the high volatility, the high risk, and all that is coming in. And even though, and also I think one of you said the NASDAQ overnight range was probably the lowest it's been in 4 or 5 months. I had 19 points on the S&P as the overnight range. That's crazy low. So it's like volatility is contracting. And of course, volatility contracting can be, by itself very concerning, because contraction usually means that we're going to be sideways and or getting close to a change in direction, as it contracts, builds energy, and then explodes again. But I don't really have, my chart has not changed from yesterday at all. My support resistance is all the same. The only difference is obviously yesterday we broke above the July 11th high. And so that was technically my breakout spot above the top side of the bull flag.
Are you sharing a chart there, Troy?
I certainly can. Share screen.
Yeah, speaking of the volatility, Troy, it's interesting to see the VIX so low. I would have thought it would have been spiking like crazy with all this craziness. Yep. It's actually went down. 17, I think.
That's what I was saying. Market's going to remain irrational longer than you can remain solvent.
Solvent. Yep, that's right. That's so true.
Yeah. There you go. Here we go. All right. You see my screen now? Yeah.
There we go.
Yeah. So, right, that high right there, right there, broke out of that yesterday. I had this is really where the breakout happened a couple of days ago, but I wasn't excited about that. So I was kind of going like this. So that's the flag part, but then we've just decidedly broken through that yesterday, and we're maintaining that today. Like I said before, there's a very large high volume node right here at 61.90. I think that's going to be the first little area of resistance. And then, we also have a very high volume node at 62.38. So we've got some resistance above. And the question is it going to have enough go juice to get through it? And, based on overnight volatility contraction, it makes me think, well, wait a minute, either we've got one of two scenarios. Either we're topping out and it's going to be very, very kind of a slow top out, maybe start moving sideways and then roll back over, maybe retest this high volume node at 60.68, or it's, it's going to explode the other way and continue to go up. I keep waiting for some sort of trigger. Something's got to trigger. Okay, so Powell lowers interest rates, which is not expected at the time, but say in July or in August he lowers. I mean, that's going to be, that injection of optimism into the market, and that's the way the market seems to think. I think, on the other hand, wait a minute, he's just lowering interest rates. That must be bad, because why would he need to lower interest rates if everything's going great? But if it's not going great, then let's lower interest rates to help spur the economy. So, I kind of think different than the market. The market loves lowering rates, but the reason they don't look at the reasons why you're supposed to lower rates to begin with. Is labor bad? Is inflation bad? If inflation is good, then we can lower interest rates. If the labor market starts to get crappy, we'll lower interest rates to spur the economy. And then the act of lowering is a act of saying, hey, it's not good anymore, right? It's we're going to have to lower it so we can have some stimulus. So yeah, I don't know. I'm at a place where I had this whole move up here is I've been losing money because I am so sucked into the fundamentals, and it just is beyond my comprehension that this market continues to go up. So I have had to, in order to turn my P&L around, I have had to say, put my hands over my ears, close my eyes, and just say, what does the chart say right now? Does it say go? Go. Then you buy. Instead of, and so literally my whole outlook has changed to about a 30-minute window. If it's going to go up in the next 30 minutes, I'm going to be long. If it's going to go down in the next 30 minutes, I'm going to be short. And that's literally what I've had to do in order to sort of get out of this funk of being so tied to the macroeconomic and fundamental sentiment, school of thought. And again, it makes me always think of that saying, the market climbs the wall of worry, which makes no sense, right? It makes no sense because risk is going up, and you would think that they would be adjusting their portfolio risk to adjust to that risk, but they're not. Which brings me up to another of, are they taking this market up to retest the highs so they can then take it down and take it down really hard? I don't know. Fundamentals would certainly point to that. But in the short run, it's just very, very bullish. If I go to the NASDAQ, oops, can't do it. Wrong screen, sorry. The NASDAQ I don't have all marked up, but again, it's chopping along. It looks like it's got it broke from that high a couple of days ago, where it got the same basic pattern. Now, the NASDAQ doesn't have the resistance above. So the NASDAQ could certainly has more go juice to the upside than the ES. There's just very little overhead resistance, especially volume-wise. On the S&P, we had distinct high volume nodes up above. And here we have just nothing above. So we get to this. I mean, once you break it, there's nothing to hold it down. There's nothing to not say. We're in new territory, moving on, next leg up. So NASDAQ's much more bullish, I think, than the ES. At least the ES has some resistance it has to overcome. And that's all I have for, where we're going or what we're doing. But I do want to circle back after Richard's had a chance to, say his piece. I wanted to show you guys a footprint chart. I'm not sure if you're familiar with a footprint chart because footprint charts are not available on TradingView, and you guys use TradingView. But
I think they're in one of the subscriptions, one of the higher ones.
Yeah, one of the top tiers. You have to pay for it.
Oh, really? Well, I didn't even know it was available. So that's actually
it's
good.
The third or the fourth one. But yeah, I did because I was studying it quite a bit a while back and thought, well, I might have to check that out in the future.
So I believe one of the other coaches in the late afternoon session uses them as well.
Yeah, I saw somebody using it. Yep.
Yeah, I use them every day. But I don't use TradingView, and I looked at TradingView long time ago, and since they didn't have it at that time, it was just a no-go. But even if they have it as a pay, I might be interested in shifting gears and using TradingView. I definitely like PineScript better than NinjaScript for building your own stuff.
Yeah.
But anyway,
I don't know how to do any of that.
So yeah, volume footprint is on the premium subscription, which
I've actually got volume footprint here. Let me just click on it and actually see what works.
Looks like $50 a month.
Yeah, you need to be on premium.
Yeah.
You're right.
Or $59 a month if you do it monthly. Yep.
Yeah.
I did not realize they had it yet.
Maybe they just added it or something. Maybe they could have.
Because I have a lot of people that I work with that use TradingView, and I've just drug my feet, and I've used NinjaTrader for years and years, and so I'm kind of suckered into it because I've got a lot of customized tools.
Yeah.
But the mobility wise of TradingView being on an app, and it's just way better than NinjaTrader.
Yeah. I just love the drawing tools and stuff. Like it's just so easy to use.
Yeah. Oh yeah. I haven't seen anything better.
Share my screen quickly. Unless you wanted to show us a footprint chart, right?
Oh, I can circle back to that after you've had a chance to give us your trades for the day or your opinion of the day.
Do that.
I don't want to interrupt or sidetrack. I need to give Tiger time to refill his jug of moonshine.
I thought it was a milk jug. It's like he's addicted to milk or something.
I am getting a little low.
Anyway,
on the day.
Crude oil. I just want to circle back to maybe this chart here first. Yesterday's trade that did not work out, unfortunately. Just got stopped out, and then should have preferred to gone short in this massive fair value gap that formed during our session to the downside. No, actually, it was before our session, but it gave a little run to the downside. Unfortunately, again, got stopped out there. Crude oil, we got crude oil inventories, I believe, today, if I'm right. Which should be...
We do have some numbers coming out in 8 minutes, just FYI.
The home sales.
Yeah.
And Chair Powell.
Powell's testifying again, yeah.
Flap his lips.
Yeah.
Flap his lips. I don't know why. I don't see that's normally on Wednesdays. It is Wednesday, right? I'm not dreaming here.
It is Wednesday.
Crude oil inventories come out, but anyway, I'm on the sidelines here with crude oil. Anyway, I should have actually shared this chart.
At 10:30, you have crude oil inventories.
Yeah, where's that? I don't see it on my chart. On my
is that a low impact?
Yeah, for crude oil, sometimes it will.
Oh, it's a low impact on Forex Factor. That's why.
Yeah.
9:30.
But for some reason, I'm not even seeing that today on my chart, on my Forex Factory. But anyway.
Yeah, I had to add the low impact, and it's on there now for today.
So I still reckon there's more downside on crude oil until around about the, what was that, 63-ish, 44-ish, 63.50 area. Again, I'm looking at US oil here, right? Not the futures market. So this basically just being a warning line sloping to the upside doesn't mean it's going to contain price, but price has previously respected these angles pretty well. Not so much during this current decline, but it could be used as a potential area to target, right? And if price does get there, maybe give a bounce, maybe take a, I don't know. You can't really say we're in a downtrend right now, right? Who knows what's going on with crude oil?
Mm-hmm.
And since I don't even see these inventory reports that's supposed to come out on my Forex factory, I don't know. I'm just going to stay on the sideline with crude oil today.
Well, it says negative 1.2 million forecast. If you don't see it there, yeah.
You know why? Because I'm on freaking Tuesday. I was
I
trying
said
to
happy
read
hump day this morning.
Richard. Let you wake up. Yeah, here we go. There we go. Crude oil inventories at 10:30. So yeah, I'll stay out of crude until then. Yeah, because I was trying to figure out what Fed Chair Powell said yesterday. If you go back a day, and then you can obviously go and read what he was jabbering about. So that's why I was still stuck there, getting confused. I do apologize. Anyway, back to, let's say, the NASDAQ. What I drew here on this little box over here is just the first 15-minute opening range of the NASDAQ. Now, I don't know if you guys recently seen all of these YouTube videos of these guys trading the ARB strategy with the opening range breakout type of vibes, where they wait either for the first 15 minutes or 30 minutes or whatever the case might be. And how profitable it is and how, mechanical it might be. Basically why I wanted to draw this on a chart today for you guys, especially for those guys watching this, is you got to really be careful where you get your information from. Just viewing a lot of these and just go ORB strategy. And lots of this is actually done on the NASDAQ. Some guys do it on a 5 minutes, 15 minute, or wait for the first 30 minutes after the 9:30 a.m. mark, right? And draw a range. And then if price breaks below the range, they'll go short. If it breaks above that range, they'll go long. Now, just doing a quick little back test on this, and I've known this because I tried to trade a strategy many years back. It's nothing new. It's quite an old strategy. You're gonna suffer more days than not, ending up with losers here. And it's just maybe, I think we touched on this yesterday, Troy, with like how many traders tend to do something. Maybe it's better to do something completely different, being a bit more of a contrarian trader, if that might be the best way to put it. So if you went short in the first 15 minutes here, price already, boom, moved all the way back to the upside. Now, what I would like to do here, just maybe for a quick scalp today, is there was a little fair value gap that formed downwards. Now, that's probably going to get broken. It's already been broken. If we get a close above this, then, and we maybe, let's say, head towards these highs, it's not really far off the most recent highs, around 22,357. Again, looking here at the CFDs, then I might attempt to go long just for a quick scalp. See if we can get a little break above that fair value gap, maybe a pullback towards it, and then enter along. Right? On the CFDs, and this is why, I'm a little bit in the dark here. We're already flying past all-time highs. Whereas actually we discussed this yesterday. On the actual front month contract, we're not there yet, right? Troy, as far as I believe. We just broke the high that was set on Feb. And I believe on the futures markets, this is actually a lower high, where this high that formed in December was actually a higher high.
Yes.
It's the other way around, and that kind of, these things scare me, especially with the price now, and probably on the continuous contracts will break the all-time highs. I can't say that's 100%, but I think that is a good assumption. But how far this is going to go, I'm getting very, very nervous, to be dead honest with you. But again, as traders, what we need to do is probably just, stick with what you see on the charts and trade it. So don't really have much to show today, guys. I think we're just going to continue trending higher. So to try to figure out a little play here, definitely would be interested in scalp. I'm going to sit out on crude oil, as I mentioned, just because of those inventories. That's going to come out in, half an hour's time. But if I could just look here, simple price action paired with fair value gaps. If we can get a little break above that fair value gap, get close to today's current high, pull back into that fair value gap that then turned from bullish to an inverted fair value gap, then I might go long. I might even be a little bit more conservative to see if I can get a push out of it. Maybe on a smaller time frame, like a 1 minute, see if I can see a bullish candle form if price were to do something like this. Pull back into it, form a bullish type of vibe, and hope for the best. See if price can continue higher. So that's what I'm looking at. Unless price just mucks around in this range, which also happens, and then there'll be no opportunity.
Yeah.
So that's what I'm looking at, guys. Not really too much happening on my side. We've got a comment there from Abir. He says, hi. Good morning, Abir. I don't know where you're on which part of the world. Robert, joining us again. Good morning, Robert.
The usual suspect.
Yeah, so let's see. Other than that, you guys have anything else to chat about? Troy, maybe show us, what's his name, those charts, or unless you've got a trade happening, Tiger.
Oh no, I was just going to comment that that's a pretty similar strategy that I used for kind of some penny stock trading a few years ago. Just more that opening range breakout type setup.
Yeah, and you see it works well until it doesn't,
You're right. Well, just like anything.
Yeah, and I think it's sort of like, obviously it gets saturated. Like every YouTuber that tries to be a trader is making videos about this, and just go spend time. What's great, obviously, with the I don't know if the Ninja Trader platform still has that, Troy, the replay feature that we have on TradingView. I mean, just do yourself a favor and follow some of these guys and what they say, and go look at these strategies with the replay function. Just go weeks and weeks back, and I can't find any winning week on the NASDAQ using that strategy. I mean, there's different variations from it that would have had a positive week, or at least a break-even week you would have get sometimes, but you just got to be so careful. Well, so if I wanted to trade that, I'll wait and see what everyone else is doing. That's probably went short here. Now, depending where they put their stop loss, maybe they're right today, maybe they're not. But price did make a move up. If it doesn't continue low, these guys might have got stopped out. If it does go higher from here, then, I'm going to be trading it the opposite direction, if that makes sense.
So do you look at a higher time frame trend, or you don't care? You'll buy or short it depending on the setup?
Yeah, depending on it. So look, I don't really follow the higher trends. I mean, it's very clear now, as Troy shown there, even going to the daily, that the NASDAQ is flying skywards, right?
Going to the moon.
It's going to the moon. So although things might not be making a lot of sense, in the high time frames, I would prefer to just be bullish, but also being very cautious with price nearing all-time highs on the future side. What's going to happen? Or we can just put those highs, fall short of it, and then see a reversal. Who knows? But I would like to trade to the upside. That's for sure. Today, if I can get a setup.
That's been a common theme in the last couple of weeks. Just careful. Drop risk. Careful. Even more so than normal.
Robert's giving us some comments there. Tiger showed up and showed the second session some love.
Oh, yeah. I was giving Jannie and Paul some.
Oh, you're in the second session as well, yes?
Yeah. I was asking them how, what did I ask? I was asking how the ceasefire, what they thought of it, and they said, good. That was their answer. Just one word.
Was it?
And I had a good idea because they were talking about all the coins. I know Paul does a lot of
I said tick into his crypto, right?
Yeah, I was like, well, we need a tiger coin. I need a tiger coin. And then they typed in tiger.
You can go create yourself meme coins these days on the Solana network, Tiger. I can help you with that. We'll just call it Tiger.
I know nothing about it, so I'd have to have your help.
It's actually really, really easy to do. And then what these guys do is basically create a coin. They get launched on Axiom, which is like a specialist platform that only track newly launched meme coins. Now, these are coins that before they actually get a massive market cap and, become something like what's it, Pepe coin, or what's that other one, Shiba Inu, that used to be a meme coin. They don't really have any value, but they all started as meme coins, and you must check it out. I mean,
Axiom,
coins get launched on these platforms, like 5-10 of them every second from across the world, and then some of them will make it from the launch phase. When they reach it, I think 20,000 market cap, they'll go to a pre-market phase, and then they actually go to a launch phase where, I don't know, they can be traded some way. And then what most of these guys do is do rug pulls. So they create these coins, people start investing, buying into it, and you watch these charts, and it's a lot of crap in there, man. There's some of these things they call these coins can be pretty rude.
Yeah. So
and then these charts basically, and all of a sudden, what the guys do in the background that created them, they do a rug pull or pump and dump. So same thing, and they remove all the liquidity of the coin and basically run away with all the money that's been invested in it.
Lost my signal
over and over again. Surely it can't be legal, right? But anyway,
we don't need SEC beating our door down.
Yeah. Yeah,
didn't the U.S. pass some sort of current crypto legislation that's got some sort of regulation to it?
Yeah, the strategic reserve, was it?
I don't know. I'm not a crypto guy. I have stayed away from crypto. I haven't.
I heard it in the news. Yeah, they basically created a strategic reserve. But yeah, I'm like you. I mean, heck, I never even messed with Bitcoin until probably the last year. I always told people, because I was always asked, have you bought Bitcoin yet? Have you bought Bitcoin yet? I said, no, I don't invest. I trade. So if it ever starts behaving like a fiat currency, then maybe. But
I bought 3 Bitcoins when they were like at $200.
Yeah. Nice.
And I sort of forgot about it. And I think when Bitcoin was like at $1,000, or I think 15,000, or going past $12,000, they were like, hang on, I've got Bitcoin. And it turns out the exchange I bought it from either went bust or it was a complete scam. So, you can imagine what that felt like. I thought I made some good bucks, and then it never even existed.
What was the price when you noticed
$200 per Bitcoin?
I mean,
$200.
Did it go higher before you realized you didn't have it, though? Or like, where was it at?
I mean, Bitcoin's now what, over $100,000? Imagine that.
Yeah.
Dang.
Yeah. So, so many scams involved there. So after that, I was like, no, I'm staying out of it. Not trading Bitcoin. Definitely not buying Bitcoin
with FTX, right? Was that FTX, or what was that?
FTX, that was with Sam Bankman-Fried, wasn't it?
Ironically, he's in prison with who was the other guy in there? Was it? I think Diddy. I think Diddy's in there. I think they're in there at the same place. Yeah, I was watching. Well, because I was watching an interview on YouTube a while back. I can't remember who was interviewing him. Tucker Carlson, maybe, or somebody. Yeah, but yeah. He was talking about that they're in the same day room and everything.
Yeah, that's pretty crazy.
The high-profile prisoners go to the same spot.
I mean, he got away with billions, but it wasn't just him. I think it was that chick that was with him as well.
Yeah.
Or a whole gang of them. It's like
the nerdy girlfriend.
Nerdy girl with the glasses, yeah.
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 Yeah. And she's still out, as far as I can.
She's still out, yeah. She probably, I don't know, gave some inside info or something. Made a plea bargain.
Yeah, I think that's what they I think that's what they said. Yeah.
Yeah.
Crazy world.
Well, it's pretty quiet here. I mean, I know I should probably not be looking at the NASDAQ if Troy is also looking at it. I don't know what his feelings are about things, but that's pretty much it. I mean, you can't force trades either. So
Right.
sitting on my hands. Hopefully something happens, and if it does, then I'll react, hopefully in time. Maybe things will start heating up as soon as Powell starts speaking. I mean, it's probably 10 minutes in already.
Yeah, that's pretty much where I'm at. All my alerts are quite a few pips away from where I want to buy or sell. So
Yeah.
just
New
needed
home-
to close the gap.
New home sales were very bad, minus
Were they?
13.7%.
Wow.
And that's kind of what we're seeing, that I'm seeing, at least in my neck of the woods, is that real estate's grinding to a stop. The number of days on the market is skyrocketed from a couple of weeks to now we're up to, at least in my area, we're up to 30 days. And I'm in an area that the last housing bubble in 2008 didn't even affect us. It just stopped going up. It didn't go down. We're Tennessee, the southern states, for the most part, with excluding Florida, the southern states are high demand because people are retiring to, cheaper housing, and so
they can't afford it, right?
Yeah, we have tons of people coming from California, Texas, New York, New England states are moving to Tennessee to retire because they can sell their $1 million home, in New England, and turn around and buy the same size house for 300 grand here.
Yeah.
And so we have not experienced, but we are starting to see a slowdown in the number of days on the market. That being said, I was going to ask you guys back on the your opening range breakout question. My question is, I've been trying very hard to move from pattern recognition to liquidity recognition.
Yeah.
Mm-hmm.
And what I find is that on the obvious breakouts, like a opening range breakout or 30-minute or 60-minute breakout, it's such a well-known strategy that you can actually look on your super dom and see size on the other side.
Yeah.
So above the breakout point, you'll start seeing size, people wanting to sell into that perception of the breakout. And what I end up doing is watching to see what happens. Do they knock the size out? Is there enough liquidity to take out the liquidity on the sell side? And a lot of times, if you wait for that spike through, you wait till it pulls back, you have a much better entry point slightly below the breakout point. And if the trend is your friend, you're gonna make money, but you don't get sucked into that breakout.
Yeah.
The first time it goes through, and you can watch the liquidity shrink. Once they take out the liquidity, and sometimes they don't. Sometimes they go up to that level, and it you see all this volume go off, but it doesn't break through, and that's kind of scary. You're gonna like, there's some resistance there. But if they knock all of it out, and sometimes it'll spike above it because there's no liquidity above it, it'll spike up and come back down. That comeback is more of I see that as a much more viable entry, but I would default to, only doing that on the side of the trend. So if it does the breakout, you wait till it pulls back and then you go long, and start thinking about liquidity, because that's what the big boys are doing. The big boys are playing.
Yeah, what I'm just trying to say there is, like, I'm just trying to find a trade here. Although primarily I'm looking at what's happening liquidity-wise, on the NASDAQ. Now they're going to run liquidity. Some people might call this the engineered buy-side liquidity over here. They run it, manipulation, and then get distribution. So really looking at areas where there might be a lot of stop losses, etc., that might have formed during the London range or the New York morning session. and then see what happens if those areas get hit. So that's primarily what I do is look at this type of liquidity strategies, right? Liquidity sweeps, grabs, or whatever the case may be. So that's definitely what I look for on my radar. But I think it was just interesting today to share a little bit about this ARB strategy. I think Discord, someone actually asked me about the ARB strategy a little while ago. So we active on there from time to time. And I just had to give my 2 cents worth there. I mean, it's probably going to work out today. Me saying that it doesn't work out that often, but yeah, you're 100% right. It's probably better looking at the liquidity side of things. I don't just have the DOM volume here on the NASDAQ, or at least a depth. So, and obviously I execute here on one of the Hola Prime platforms. But yeah, I mean, you're 100% right. I think the way to trade, especially the NASDAQ and perhaps the ES, is to look at this liquidity hunting or draw towards liquidity, that sort of stuff. And pair that with fair value gaps, that sort of thing, which is what I'm trying to do in most cases. But there would have not been any setup here as of yet. Maybe if price can come down, let's say take out this morning session lows here, then give us a bounce to the upside, maybe inverted fair value gap or bullish fair value gap forming after these lows have been run, then that might be a situation to go long.
I kind of have an answer for just using the master pattern. I mean, just kind of answer, Troy, kind of like what you were talking about. Just as an example, how I would have looked at it had I been watching it this time. You mind if I share my screen real quick?
Yeah, please do.
Okay. So, and this is just going back to yesterday, was that yesterday? Yeah, yesterday, whenever we broke the high from, what was that, February? Let me just click on my share. And so, so yesterday, just going back to that previous high point, we did break that at, what was it, Tuesday at, about 2 o'clock my time, 2 p.m. my time. So the way I kind of would have looked at this is with my master pattern, and just as a reminder, it's good on any time frame. So I actually got a little bit of a major contraction right here, okay, before it broke that high. So, I mean, ultimately what I see is price broke down out of the zone, out of the contraction box, and then it broke through, which also broke through that high. So this creates a liquidity line where people are probably putting their stop losses. And this, again, is on a smaller time frame.
Yeah.
So if you buy here, according to the master pattern, just as an example, you're buying overvalue.
Yeah.
So for me, I would want to buy undervalue, which means I'd want to buy under that line, under that.
Yeah, I mean, you got a lot of breakout traders there as well.
Right.
Trying to brighter breakout, and we know how that goes most of the time.
Yeah, and so what happens? Well, price comes up, it catches that. Probably the big banks probably push it right back down to collect this liquidity. They push it down here, create a lower point. But then ultimately what happens is price forms a demand zone on a small time frame, 5 minute. Okay, that's a red candle, but because I have the indicator turned on, that's why it's green looking. But that's the last red candle before a spike through, spike up. And then price comes down, catches the unfilled orders in that demand zone.
Yeah.
And then pushes it right back up. So,
yeah.
Much up, way up. So that's kind of what I love about the master pattern is it just shows me where relative to the time frame I'm on, where's below value, where's above value.
Related. And that's a green horizontal line on your chart, right?
What's that? I'm sorry.
The master pattern.
Yeah, so that major contraction point, and that line just populates all the way across. Yeah.
Okay.
So here's the thing. Now I can
Is this
buy
something
anywhere.
you created yourself as well, or is this also
No. It's just basically kind of been created out of Wyckoff theory. I mean, accumulation, distribution, trend.
Yeah.
I mean, I don't know who exactly created it, but it's a free indicator on TradingView. Yeah, you just go on here and just I've got it saved, the master pattern indicator by this guy Beto or whatever however you say it. But yeah, you could theoretically just buy anywhere under value.
Yeah.
But I personally like to just buy after it touches a demand zone. So that's why I personally would have, bought right here.
Yeah.
What are you using as your demand zone tool?
It's called MTF S&D order block. So that's another free one. It'll be where's that? Right. Yeah, right here. Supply and demand order blocks, multi-time frame. JP7FX. Yeah, like I was saying the other day, Monday or Tuesday, I used to just plot them all manually, just eyeball it, but
yeah, I mean, sometimes it takes a little while because the supply and demand zones I have, as well as those fair value gaps. I think Tiger just froze up there.
Oh, am I back?
You're back.
Oh, okay. Yeah, that's done that twice to me. Sorry about that.
There are some really, really good free versions, that's for sure. But it you probably have to go through quite a few of them until you find the one that's that really looks and works well.
Yeah, it does. It just saves a ton of time. Because then you can just go to any time frame and it'll just plot whatever's there. See what I'm saying? But
what is the center? Is that the center line that it's putting out into the future?
Oh yeah. Well, it's just basically putting a rectangle around. If I scroll into it, just as an example, so it's the last down candle before the big move up.
Gotcha.
And then the same thing here. Down candle, big move up, and it also needs a little bit of a fair value gap for it to qualify as its own. So, like if this candle if that candle right there came back into the zone, it would disqualify it because it's been mitigated. So, that's the goal, is not to trade mitigated zones, even though that's what I did yesterday for the gold trade. But I did that because it just barely touched. So I don't know. I'm just pretty picky on it, but yeah, that's basically it. Master pattern, supply and demand.
I'll go check that out for sure.
Yeah.
And Troy, your footprint charts, you want to show us that? We still have some time. Oh, we're already like 22 minutes past.
Time flies with you guys.
Yeah. That's why I like you guys so much.
Good conversations. Flies with everybody. Jannie and Paul flies with them too. Those two are coots. I love them. I love those guys.
Awesome.
Okay. So are you? Let's see. Yeah. All right. So before you say anything, it's a little busy. I know it's a little bit busy, but I have multi-monitor, and what I wanted to do is sort of make it so you could kind of see the scope of what I'm looking at. So this is a footprint chart, and I'll maximize that so we can really see what it's doing and how it's actually going to tell us what is going on. So I don't know if you can actually see the numbers inside the candle, but it differentiates the order flow into executed on the bid, executed on the offer. So if it's on the left-hand side, that means it was executed on the bid. And if it's executed on the bid, that means that you have a passive buyer and an aggressive seller is hitting the bid. That's the only way you get a transaction that happens on the bid, is to have an aggressive seller hitting the bid. Because the buyer is passive in the fact that he's just waiting for his order to be executed. If so, if not, he may increase his bid higher if he really wants a fill, right? He's passive. So this is a way to see the aggression of the market. So the numbers on the left-hand side of a candle are, and if you can see, this may not be the best, but you can see there's a tail here.
Yeah.
There's a tail, there's the body, there's the wick at the bottom.
Yeah.
So you can still see the shape of the candle, but now you can see inside the candle and see how the candle was actually built from a perspective of aggression. This is the delta for the candle, that negative 192. That means if we took all of the aggressive selling, which happens on the bid, we gave that a negative side, a negative for that summation, and with all the volume that happens on the aggressive buying side, which happens on the ask or the offer, that's a positive number, and they net out. And so you get, like, this bar was a down bar and it had a negative 192. And now I think one thing, a lot of beginners that look at this, they don't understand what that negative 192 means. They think it means more sellers than buyers. But as you guys know, you have to have the exact same number of buyers to sellers, because there has to be a transaction, one buyer to one seller, right? Well, this is talking about aggressiveness. There's more aggressive selling than there is aggressive buying. So we're comparing aggression. So I call this my aggression chart, or a behavior-based chart. And in my perfect world, I would move from being a time versus price chart to thinking about it as behavior. This is a behavior chart. And what is the behavior? Oh, it's aggressive buying. Therefore, I should go long. Okay, so that's the idea. Now, the reds and the blues are imbalances. So this is letting me know that there is aggressive buying, and you compare these bid to offer, so they're compared diagonally. And so that 50 there, if you compare it to the 0, obviously that's substantially bigger than the aggressive sellers. There's no aggressive sellers at that point, only aggressive buyers. And we look at ratios. So we want to see that 197 to the 6. We want to see a 3-to-1 or a 2-to-1 before we make it blue. So we want to see if the behavior is aggressively buying or aggressively selling. And what happens is you are able to then start to see patterns within this that shows you the anatomy of a top or anatomy of a bottom. So as an example, this sell right here, that's a pretty decent sized sell. So you think about this: buy is too expensive. Oh, let's take an opportunity to sell. So a seller comes in here and starts to sell. We move to the next one, and that sell triggers more selling, and we get a little pullback. We get a little pullback to where it's now a pullback, and then what happens? Buyers come in. There's that blue number right there. Buyers start to come in, and it rotates back to the upside. Now, obviously, it's never going to be perfect, like, and as an example, but you have to learn how to read this flow as I see it as aggression, and who's winning is the aggressive buyers, the aggressive sellers, and where this is not interesting at all in a sideways market. I don't care about any of this. What I care about is when this gets to a support or resistance area, because then I can sit there and you can look in there and see how that's being formed. So if we're at resistance, I want to see sellers coming in, and it right here at this, I see a buyer there, 210 at 210, but I don't know if this is a 6155 is a special number or not, but it's obviously an inflection point of some sort. But you're not seeing buyers come in. There's no blue numbers here at the top trying to push it through. That would be a sign of weakness. If I see this right there is the first kind of chink in the armor, that 236 sell. Now, we don't really see any aggressive selling come in until we get to this bar. And then we have there's 3 sell imbalances. And you start to see it start to move more aggressively to the downside. We're just moving sideways. So again, it's hard to give you a good example in real time. But that's the idea, is that you can actually see buyers come in at the top of a candle or sellers come in at the top of the candle. Obviously, if you're looking for a breakout trade, we want to see buyers coming in, right?
Yeah.
I want to see blue up here at the top. If I start seeing red numbers up here, I know that it's going to start, maybe starting to turn over,
Okay.
to come down. Any questions?
Yeah, that sorry, I don't know if you covered that, but what's those histograms in the bottom indicator panel?
So this is self-made. This is secret sauce.
Secret sauce.
Secret sauce.
We gotta pay him for that.
Okay, but I'll give you the concept behind it. So,
Please do.
So this is volume, and what it's doing is it's looking at the previous 3 bars, and it says how much, once I get to twice as much, and twice as much can be of any of the previous 3 bars.
Okay.
I highlight in magenta, just showing me that there's just a volume spike. Volume spikes many times signal tops or bottoms. And you can see that this spike here was the bottom, just like this little spike here was the top. Okay, I'm not making this up, and this is not, all you have to do is have a volume tool at the bottom, and you can see this. Now, the shaded part means that I am overvalued or undervalued based on an oscillator. And I use, for this oscillator, I use MFI. I don't know if you've heard of MFI. Money flow index. Now, most people, and for you guys that trade Forex, you don't want MFI because MFI has a volume component. And we know that Forex doesn't care about volume and doesn't report volume because there's no centralized, place for that trading. You want to use RSI or stochastic that's 100% price based on its inputs. So I use MFI because I want volume information, because I'm an order flow junkie here, and so I'm using MFI as my oscillator to give me an overbought, oversold. And so you can see I get a volume spike, and then I went to overbought. I get a volume spike, and I went to oversold. So this sort of gives me a one-stop shop, kind of where are we, based on a short-term oscillator, overbought or oversold, as well as a spike in volume. Now, this spike in volume is nothing. It's, this is 3,000 contracts. This is a 30-second chart. So it's pretty extreme when you go to, I'm looking at the flow, somebody's pouring, and I'm looking at every single little drop that's being poured out to see if there's an increase of volume or not, and if that's associated with a price change, and or a flow of aggression.
So those gray boxes you have, are those the highest concentration of volume within that candle?
Yes, that would be, I call it, for lack of a better term, a COT. It's like a POC. Okay, right? The concept of a POC is the price, highest volume price of the day is a POC, point of control.
Okay, gotcha.
All right, so it's the same concept. It puts a gray area as the highest volume within the candle. So POC, I changed it to COT just so that it was candle versus P. So you can name it anything you want, but it's the high volume price within the candle. So it's technically the POC of the candle. So yeah, and what you can do is you start looking at this. You can actually, I've got software that allows me to make a moving average of the POC of each candle, which kind of is a different way of looking at things, because you're not looking at price, you're looking at price and volume to give you a moving average.
So I would imagine scalpers really like this.
I don't know how you can scalp without it. With one exception, this Richard will enjoy this. Okay, so I'm going to minimize this screen, and I'm going to go to NASDAQ. Okay, NASDAQ. make this much bigger so we can look at it and see. You're going to see the problem with a footprint candle. Okay, so we put it here. Do you see the problem?
Yeah.
There's no volume, small numbers, and it's all over the place. So I actually don't look at the actual numbers in here. I look at the deltas alone.
Okay.
So I'm more interested in the delta versus the reds, because you can have zeros and lots of zeros, and so you get skewed number of blues and reds.
So what's the delta telling you there now? Pushing higher, obviously. You can see that on the chart, but
yeah, and
more buyers stepping in, right?
Yeah, and the more and you would play the way I would play this as a scalper. If I would actually turn off. I'll show you. I can do this real quick. I would turn off the black numbers and just show the blues. You just show the blues and the reds.
Well, and you could also alter the height or the height of that too, right? Like to where it only shows a smaller amount of numbers for like a wider area, I think.
You can. Hang on, I can't think and do this at the same time. Yeah, take this and go to transparent. And what that'll do is just show me, it should just show me the reds. Yeah, the reds and the, that starts making it a little more
easier on the eyes.
Yeah. So it's not bouncing all over. You're more interested in how many, is there a lot of red? Is there a lot of blue? And then of course the delta then shows you, what the net action of that bar was, negative 119, we're at +8, it's bouncing. And that's the problem with footprint, is it does not deal with low volatility, high volatility and low volume. It just doesn't translate very well.
Okay.
So that's kind of the downside to the footprint chart. And obviously a footprint chart is very difficult to manage if you're trying to trade a stock, because the stock trades in fractions of a cent, and that messes up the increments that it's plotted. So it doesn't work very well with stocks as well. Now, I want to roll this by you guys, because you guys are going to find this particular thing is highly, I don't know anybody else has thought of this, and I'm not sure it means anything. So my brain, this is a cumulative delta of the ES. So the ES net delta for the day is 3,700 contracts. Okay. This is the NASDAQ. So net on the day, we've added, 532 contracts have been added to the inventory overall. Now, obviously, if you know anything about inventory, to go up, we really need positive inventory. We need to be adding to inventory, and vice versa. If the market's going down, we should be contracting inventory, because people are selling and closing their contract disappears. Okay. When you buy, you create a contract, now you're long. However, this line here in the middle is a MFI of the cumulative delta. So it's running an oscillator on top of the cumulative delta. Now, what does that mean? I have no idea. Mathematically, I can't tell you what what it means. Academically, I do not know what that means, but it's really, really interesting to watch as it goes overbought or oversold.
I was just going to say, the overbought and oversold sort of coincides with, especially during the morning session when that starts, with little swing highs and lows, right?
It can. Remember, this is per candle, the net. So price could be going, this is not price. This is just the amount of contracts that are going back and forth, whether they're increasing inventory or decreasing inventory, right? And so then you turn around and put an oscillator on it. But yes, in general, price follows inventory. And that's the key, is that price follows inventory. So inventory, so when you get to a top, you start to see the buyers slow down, right? So they're not adding contracts. And you may actually start to see selling where price hasn't started reacting to the selling. You're seeing selling where inventory starts to contract, but price hasn't reflected that. Okay, so that's where this concept comes in. That's why I've thrown this up there and I've played with this, but I don't know what it means. Okay.
So currently it looks like it's just like what the market's doing, right? Running sideways.
Yeah.
So basically up top, they're playing hot potato. They're throwing it back and forth. And on the bottom, they threw the potato, but it fell to the ground.
Yes. So
that's the way my brain sees it.
And what the cumulative delta tells me is that if I'm going to short today, I'm going to short NASDAQ because it's obviously weaker than the ES. The ES is still from high to where we are. It's still negative, right? It's still, I mean, it's going down overall, even though the number is positive. So anyway, I thought you guys would be interested because this is like some kind of a weird mad mathematician stuff.
Yeah.
You know, that you might enjoy seeing this.
I like how you think out of the box, Troy, for sure.
Yeah.
And I would love to hear comments at some point of the math behind this and what it actually means.
Well, I got to say, I hate math, but I had an A+ in geometry because I like patterns, which is probably why I like
that's spiking up now. Jeez. Sorry.
Yeah, that's going to give me something new to study.
So the cumulative, just remember that the cumulative delta is the purest form of order flow, because you're seeing the buyers overwhelming the sellers and vice versa. You know, this big spike, that's pure. I mean, a lot of times this may be a algo that's just spiking. You know, we went from, and they added, 1,800 contracts, boom, just like that. Yeah. And that's with selling. That's with selling, right? So that's the net. That's the net action. Now, this could be a news event. Yeah, so that's what the cumulative delta is really. I have to see it. I am looking at it all the time to see, because to me it's telling you what is the overall premise, what's going on. Well, at the moment they're buying. Buying is, I mean, even if you go back to 930 and draw a line, it's going up, right? Yeah. So the premise here is that it is bullish. But on NASDAQ, notice that on NASDAQ we didn't have that same spike. Yeah. So, NASDAQ's not buying into whatever this was for the S&P. Now maybe that's just an algo, and this is a spike where you're gonna play reversion to the means, short it, and it'll come right back down to where it was. But this is telling me that the NASDAQ is definitely more negative. It did not spike on that. It should have spiked. They should have been very similarly correlated, and they weren't. Anyway, I know we're about to run out of time, but I wanted to show you guys that. And the next time we're together, if you have a chance to think about it, I'd love your feedback as to whether this whole concept is bullshit or not, right?
Well, there's got to be something to it.
Well, when I'm definitely going to ask you to show me that again if we together again in the morning. So yeah, very, very interesting stuff.
Yeah.
Yeah, it's a different, when you take all the order flow into consideration, you're looking at aggression versus, buying aggression versus selling aggression, and it all boils down to behavior. And whether it's an algo that's doing it or it's the retail traders that's doing it, doesn't really matter. The key here is that there's behavior, and we know that behavior is predictable.
Yeah.
Right? I mean, we can predict behavior. If we know that the behavior is buying, we know there'll be further buying. Humans and algos are predictable. You just have to be able to, figure it out.
Spot them.
And spot them.
Know how they behave.
So that was
when are you guys back on again? Tomorrow?
Yeah, I'm on the same time all week. That's where they put
perfect.
me. You won't see me till next week. I
All
just
right.
do Tuesdays and Thursdays, or Tuesdays and Wednesdays, and you might see me if we're in that meeting tomorrow. But
Okay. Cool.
Yeah. Hopefully we'll see
Well,
what time.
James, we did reach the end of the session. Thanks so much again for your inputs, your wisdom. I really
Good
appreciate
stuff.
that. And we'll check out those charts of yours again, Troy. Very interesting.
okay.
Yeah, it gave us homework.
I,
Good one.
and I'm okay with you saying, dude, you're an idiot.
I just need to see it more. This was the first time. So
okay.
All right, guys. Thanks so much to all of you. Thanks for watching. Please stick around for our next round of coaches, and I'll be back tomorrow. I'll see you again in the morning with Tiger, and we'll see you hopefully back next week again, Troy, back in
Mystery guest
session with us. So
all right,
all the best from our side. Take care, guys, and goodbye.
Cheers.
Bye.
Bye.
Mr. Gallo, Mr. Paul, how's it going, guys?
Are we calling me PP again now?
No. We with your permission, Paul G, can we call you Gallo? Well, oh, you are muted, mate.
Perfect. Sorry. Great to see everybody. And yes, perfect. Gallo, I'm very used to that. So
Gallo, yeah.
perfect.
That sounds like you've done something wrong, right? Gallo, come here.
Yes. It won't be the first time. So
Great stuff. How's your week been, man?
for me, it's been great for me. I've been juiced up this week, particularly. The trading front's been fantastic. The S&P 500's been treating me very well.
Nice.
But unlike today, where I just haven't even done anything today. Today's been so dead in the S&P 500, as you might have seen. We've been in a 10-point range now for about an hour and a half, and probably because of the Powell testimonies still going on and everything, and everybody's just kind of sitting on their hands. So let's see.
Yeah, well, Paul had placed a number of trades this week, and so have I. So, I think, you're not really standing out here. No, I'm joking. I'm joking.
I hope not. I hope we're all trading.
No, no. I took a small trade on the NASDAQ yesterday's session, which is a small trade. It worked out, but we've made new highs, as you probably know. We have now cracked those new highs. What is that? Okay, sorry. Let me just quickly. Oh, you can't see my screen. Well, I'm going to explain to you what I see. Now, let me show you quickly. How are you, Paul?
I'm good. Just busy day. I've been all
Yeah.
over the place, filming on the beach for Hola Prime. I've just had a meeting. Now
Filming on the beach.
Yeah. Just everyone just thinks you're an idiot
Nice.
doing that, right?
Well, this is a good time for you, right? In the UK, it's summer and all of that. It would have been a bit of an awkward time, like any other time of the year, to record something on the beach. Yeah, as you can see, trading you can spend all day on the beach.
It's like 45 degrees.
Raining. I'm like, look at my life. It's so good.
Great. Fish and chips. Yeah. All right. So, yes, the NASDAQ, we've cracked the all-time highs. You can probably see, let me just go to the smaller time frames. You'll see that little, where is it? Oh, you see that, this line? Yeah, that was the entry. Can you see that? Can you see
Cannot
that?
see it
Oh,
yet.
you can't. I haven't even shared my, oh my God.
Present the chart.
All right.
Present the.
There we go. So where is that? Okay, so that's where I took the entry right here on that. I'm not sure if you can see that. And this is a little dotted line, and that's where it took profit, right? Just below the all-time highs. But now we've cracked the all-time highs. With a bit of an inside count, we'll see how it behaves. I'm still going to stand back. It will be interesting to see. I think the only thing that I do not like, and you'll see me repeat this over and over and over, is like if you get this really steep rally, right? If you get this steep rally, then you can expect some sort of correction, right? It's very similar to the dollar yen that we looked at yesterday. By the way, just an update for those of you watching, and for you, Paul, because you were here with me in the session. We identified this level here, the 50 Fibonacci level, as a potential level of interest because of the confluence. I didn't hold here, but it did hold on the 61.8, and it kind of started to reverse back from that point. So what's my point? Oh, let me go to the NASDAQ, back to the NASDAQ. Yeah, so I think we can expect a correction here on the NASDAQ. Maybe not immediately, maybe a slight push higher. But usually when you break all-time highs, it just traps you, and then you come right back down. So what do you think about that, Gallo?
Yeah, I agree. Especially when you're starting to travel into that unknown territory, or you're getting close to that unknown territory. I think people feel uncomfortable. Traders particularly feel uncomfortable. So there's got to be a period of digestion, either up here or a little bit below, to where we're starting to feel a little bit more comfortable again. Accumulation can occur to then try and break into a new area of adventure of sorts up to the upside here. So the S&P 500, we still on the E-minis, we still technically haven't. We've like touched the high of sorts. We're like a few points off of the all-time high, whereas the NASDAQ we broke out. So the Dow and like the Dow had a little bit of divergence with the NASDAQ this morning, which was a little bit odd, and I think they've firmed up a little bit together at this point. But I'm very interested to see, especially between today and honestly through the rest of this week, how this digestion occurs, or whether any kind of FOMO continues to happen where we start seeing, big bullish candles again and people just start buying everything and then a correction occurs. Who at this point, I don't want to make any assumptions without all the Powell testimonies being done with. And we all know there's a lot of headlines going on, especially on the political side. We continue to have to watch that. So, but I would not be surprised with some digestion for sure to occur here, or a little bit of a pullback.
Yeah. So the NASDAQ, apart from the trade I took yesterday, probably going to stay away from this one for a little bit longer. And then I just quickly wanted to go to the Euro Aussie. I want to take a small trade here. Because of this double bottom, and if you look at the longer time frames, especially on the daily time frame, you can see whether we had this almost like this little inside candle. We had a lower candle, like a lower wick trading into this lower shadow, and now we're pushing back to the upside towards this resistance area. Yeah. So on the 15-minute, because we are probably have to wait for this candle to close, but you see this maybe it will be clearer on the 1 hour time frame. Yeah, so you see it, like you get that drop and then a push back up and then retracement back to the downside, but forming this divergence here. So on the 15-minute time frame, I'll just place a trade there, and I'll place my stop loss below the low of the pullback. All right, and then I'll just take my profit at that high there. A little bit lower, just to increase the probability of it actually reaching that. Okay, so that's the Euro Aussie. And what did we just look at? Oh, the NASDAQ. And then the other one is the pound US dollar. Now, the pound US dollar, we spoke about that yesterday. And, Paul identified this level, and I agree with him, is this 1.35045 to be exact level. That would be a really good level if it can pull down here. So you see here we get that exact same thing that we saw on the NASDAQ, right? This very steep kind of rally. So what did you call that, Gallo? Like consolidate, like a digestion?
Yeah, a little digestion period. Yeah.
Yes. Sounds like you just had a meal. But anyway.
I am starving right now, by the way. I am actually starving.
Right. So, but it's the same year. It's the same year. Now, if we do just continue, then obviously this level will be the next level of interest. But for now, it would be ideal if you can get a pullback to this level, right? But where it is right now, it's not a good place to do anything, right? On the pound US dollar for me, anyway. Okay, so that's the pound US dollar. And then a Bitcoin at was moving back to the upside, but I think we just need to keep an eye out for. Let me just do this. That. Okay, for potential third touch and a reversal from that point for a potential short, right? Not a big trade, but definitely something could line up there for an opportunity. Maybe if it goes to this line and it does reject, then you can, this level here, the 106.7 level could be a profit target area. So if we do get that touch there with a rejection, then it could present an opportunity back to this support level here. Okay, so that's something you can put in your back pocket. So that's Bitcoin. But obviously, again, we have retraced back to the upside, but in general, the broader picture, that's like a picture from the NASA space station. So we need to zoom in a little bit. So from here, in general, is like, we're in a range, and I think Paul identified a range, like a channel. So we're definitely in that channel, And so if you can get towards the upper end of that channel, then again, if price action plays along, that could present a really nice opportunity. But obviously, where we are right now, there's nothing right now in terms of where we are as we speak. For me, anyway.
Yeah, depending on I guess the price action up there, when if we were to meet that trend line of sorts, depending on how the volume is and like transacting and whatnot, would be whether you would want to play the breakout or just a reversion back into the channel, or would you have a preference? Do you think at the moment, or no? If it was to hit that target, hypotheticals here, but
just say okay. You're gonna have to repeat everything you just said.
So that channel that we're in, you can see, like, and with that, especially that trend line, if we were to hit that trend line,
this one,
would you be more privy to coming back into the channel, or would you be wanting to watch volume to see if a possible breakout potential is going to happen?
No. I mean, because if you just look at price action right now, okay. So if you look again, I always pay attention to this, like almost always, like not almost always, like every single time. Like if you have that really steep, like incline in price or rally in price, or even a drop in price, it's the probability for it to retrace is very, very high. So when it comes to this level for a third touch, I think the probabilities, I would definitely expect it to retrace first before I would even think about a breakout. It's definitely possible that it can just break out straight through. But that's why it's so important to focus on price action as well. It's not just about the trend line, right? So if price action shows you a clear kind of, it struggles there and it's reversing back down, then but I don't expect it to go all the way to the lower end of the channel. That's not how I would play it. Because the thing about third touches is unless you have a very strong bearish bias, but the bias on Bitcoin is not necessarily bearish, and Paul can probably talk more about that later on, especially on the fundamental side of things. But just from a technical point of view, because we're still pretty bullish on Bitcoin, I would just aim for something not a very steep kind of drop from this level. Okay, obviously it can drop, way deeper than anybody would expect. But that's I don't know if that answers your question.
No, of course, that's exactly what I was. I'm with you there too. So
great, Gallo, great. You're a great addition to this team, man. I like you.
Man,
especially when you agree with me.
That makes it easier. That makes it easier for sure.
Okay, so what else have we got? Oh, gold. Oh yeah, we looked at gold yesterday. I think Tiger was. I'm not sure. When he's on next, I'll ask him. Maybe he's in the chat. Yeah, in the chat, Tiger. Was this the level you were looking at? Paul were discriminating against some people when we were talking about this level every year.
Oh, sorry, what?
And
what? Who am I discriminating against?
Well, the big person leaning against the door.
No.
But okay. No, I'm joking. It's not what you said.
You think you're far away in South Africa? You think you're far away?
All right. But listen, gold is looking. This it definitely did, and this is the level you've identified yesterday, Paul, which is by this diagonal line, and you've created this little zone here. Well, I've created it. You gave me the instructions. I did the hard work. All right, but we are finding support there, right? And there's also there's confluence with this support level here as well. So we are rejecting. Now I think. Right, we are. If we can break this neckline here, that could present an opportunity to go long on gold, maybe to this resistance level here. Yeah, do you guys agree with that?
Yeah, I do. I mean, I personally am not privy to trading gold. I don't have a lot of experience with executing in gold. I look at the gold charts for fun, but yes, but I do agree.
What about you, Paul?
Yeah,
I don't know. My counterpart, you seem a bit skeptical. You don't have to be nice. You can literally just say you are full of
No. No. I will say the only thing that worries me with the metals and silver. I definitely am not a trader of silver. I'm sorry to the silver traders, but definitely not a trader of silver. But if I was to take stabs in gold, I am a little bit concerned with how uneasy that the equity markets are just so bullish that we kind of need to see a little bit of more of a pivot point. I feel like in the equities to make it a little bit clearer in the metals. If I was trying to go long on gold right now, I'd just be very careful and very managing my risk very well.
Yeah. Look, I mean, the thing about this particular setup is, you're not going to leave it open for a potential longer run, look like a trending kind of move, but it's just, when you get that bounce of support, you break out, you can just take, a relatively, it will still be pretty deep wall, you can see where the neckline is and where the risk is and where your reward is. So, but that's the kind of conditions we are faced with right now. Okay, the charts are not exactly lining up to such an extent that you go, you know what, this is going to rally for. And look at all the space to the upside, for example. Like we had on the pound US dollar. When you go back to, I don't know if you you don't look at Forex, but when we had this rally here, that was the case there at the time. We go, whoa, look at all the space. The resistance is all the way up here. So it was very clear, especially with a very negative kind of bias on the dollar index. This was the tariff announcement, and it came back down, and it wiped out this support level here, and it came all the way back down to this. This is also this is the 4-hour time frame. Yeah, so it found support there, and then it's like, whoa, look at that, right? We're not getting that with the type of structures we are faced with right now. Okay, this is not setting up exactly. It's very, very different. It's a very different kind of way. This is and
I mean the point of that line. I mean the reason why I was looking at it, because we were talking about the support line below that, and it's very easy for us to get caught out by thinking, well, that seems like a good retrace zone to the red light support line below that. But the issue is, if we don't identify that a primary trend has been broken, then we trap ourselves below resistance, right? So I think obviously it could bounce from here, but it's just important to understand that actually the lowest price point isn't always the best, because if you're at a lower price point and it invalidates the bullish setup, then you're going to get trapped, and that's what a lot of retail traders suffer from, unfortunately. So it's just food for thought there.
Yeah, great addition, Paul. Thank you very much for that great addition.
More to come.
More to come. More to come soon. Stay tuned if you're listening or if you're watching, whatever. The Euro Aussie, we just spoke about the Euro Aussie. Okay, that's anyway, I think we did get, well, at least on this last close candle, we did get the break of this neckline. So that's positive. Okay. So I think this is very likely to go higher, the Euro Aussie. And then we already look at the dollar, the dollar yen, and the pound US dollar. We didn't really speak about it. I think I just kind of used it as an example. This kind of, or did we? No, we did. Yeah, so when price comes down to this level, which will be probably clearer on a different pound US dollar chart, I've got 3 of them open. Yeah, so this confluence here, I think that 1.35 would be great if we can get that. That would make for a very nice potential entry if price action can just plays along and we can see price moving away from it. That would be a very good. This is a pretty solid area. Very, very solid. 1.35, around 1.35, maybe between 1.35, 1.31, something like that.
Yeah.
Let's not split hairs.
That looks like a dream. That would be like a dream setup for you, for sure, to get long. You can only hope, I guess.
Yeah. I mean, there's a lot of hoping going on in my trading, but I don't always get the levels. But there you go. And what else are we looking at? Oh yeah, we already looked at gold. We looked at Bitcoin. So Bitcoin, yeah, we can get a touch there. I'll be interested there. The pound US dollar we just spoke about. The NASDAQ, staying away from that one for a while. And then obviously the Euro Aussie just took that trade. The dollar yen, I don't trade the dollar yen, but we just kind of looked at it out of interest. And we just identified this level here as a very good level, right? We just delete this flip level there. And maybe, oh no, this is the resistance that comes off there. Okay, so it broke through there. And we spoke about this yesterday. I was hoping for it to come all the way here to that resistance level there. That would have been a beautiful play. If you can get some sort of candle like this, like a really clear rejection candle right off that resistance, I mean, that's just kind of free money, right? Just a bag of money sitting there in the corner. You just have to go and pick it up. But it didn't go all the way there. It fell short. So anyway, we are where we are now. But I'm not interested in this pair anyway. And those are the 4 markets. So now over to Mr. Gallo, please, Mr. Gallo, if you don't mind.
Hey, yeah, of course. Actually, is there any chance on my trading view here that I actually have like 10-minute. Currently, I can't show my other live charts. I have to go through trading view, and it's 10 minutes delayed. Is there any chance I could have you pull up the 5-minute chart for the S&P 500 by chance for me?
I mean, I can give it a
Come on,
go.
seriously, what are you asking? What are you asking?
Now you're asking like
just so people can see what I'm seeing
Mm-hmm.
here. And
data window. No, market watch. Okay, so S&P 500. Look, this will be US 500, I think, on this platform.
actually, you know what? Hold on. Let me do it. I can do it.
No, it doesn't do. So what would it be if it's not US 500 then?
Oh, it's just the dash ES would be for the S&P 500. You should, or ES without the dash.
No, it won't do that on CFDs.
I want to share. I'm just
See,
gonna
it's
share.
like so. What is NASDAQ then? Okay, okay, so maybe S&P. Nope.
That's it. No worries. I'm going to put mine up anyway because it still shows the overall trends and everything. We can go through the overall trends still and whatnot, so it's no big.
Don't worry about
that. So right now, I was just while you were talking the last 5 minutes, I was getting really itchy to get into a trade. To be quite honest, I was contemplating getting short at 61.47 on the S&P 500 here on the E-minis for a target of 61.37. So I would have had a risk of 61.49. So it would have been about 2-point risk for roughly a 10-point gain here. 61.37 just being the overnight low. So I was looking, we're really starting to not look too bullish at the moment. It looks like things are just consolidating, but in a downward channel here, both on the Dow, on the NASDAQ, and the S&P is kind of quickly following suit. Only problem is if you were to look at all these 3 markets in their channels, we're at the lower end of the channel, and that's probably not the best area to be getting short. So what I should be doing is looking for maybe to get in quickly once this consolidation around 61.45 breaks, maybe a retest of that as a little bit of resistance to then get short and then see the follow through down to 61.37, which would be the overnight low, or down to the value area low of roughly 61.28 on the TPO or market profile charts. So I am eagerly watching to hopefully get into a trade here or feel comfortable enough to get into a trade. I have been sticking to smaller size recently, I will say. I've been sizing down to allow for larger margins of error, but for bigger moves intraday lately. So this would be not a huge move or anything, 10 to 20 points max on the E-minis, but but still, given the small risk that I'm that I would be looking to give, maybe 2 to 5 points, hopefully to make 10 to 20 would be pretty great. But I'll definitely give you the update if I do see anything specifically where I need to get in within the second. But I'm also possibly I do this. I don't know about you guys if you do this, but do you trade? Have you ever traded, like, participated in the Dow at all or anything, or no?
Dow Jones, yeah.
A little bit. It's a little spready at times, I will say, but if you can,
I've traded everything: cows, like pig pork bellies.
Maybe some maybe some orange juice, a little bit of frozen concentrated orange juice.
FOJ.
What's the ticker for pork bellies?
Can you still trade that frozen orange juice? That
Oh
sort
yeah,
of thing?
oh yeah, it's tradable.
Yeah, I haven't
for
looked
sure.
at commodities for so long.
Low liquidity for sure. I think it's like the open interest is somewhere around like 2,000 contracts or so. So, like, I mean, you're talking very low liquidity here. But
yeah.
But on the Dow, it gets a little bit spready. But I will say I will participate every once in a while with like a mini or with a micro contract or two on the Dow. So I will also let you guys know if I do enter a micro contract here. But I will say my suspicions were correct to not scratch that itch that I had on the S&P 500 right now, because we treated that area where it looked like it wanted to try and plow through some volume here. That's on the depth of market between 61.42 and 61.44, probably about like 600 contracts or so. It's taking that as resistance or as support currently. So I am proud of myself for not getting the FOMO, as many of us would call it, and jumping in short when things were looking a little bit bearish here. So, but yeah, at the moment, that's kind of all I have to share. Like I said, if I am going to jump in anything, I'll definitely pop back on real quick and show you.
No problem. This is the only market you look at, right? Just the
I focus. Yeah, I focus on the ES, but I analyze the trends on the NASDAQ and the Dow for like confirmations of shorter term scalps and whatnot. But I will look at crude and gold a little bit for fun, but I do not usually trade them. I might dabble in crude. I might start dabbling in crude. So maybe we'll get a little bit of excitement there out of me in the crude markets in the near term future. So.
Right. Okay. And that's the 5-minute chart. Would you mind let's go and have a look at the daily time frame. Let's see how close that is to the all-time highs and what the structure looks like. And so maybe we can just work our way down from, oh, wow, look at that. Is that the daily?
No, I'm pulling up the daily now. And I will say it is very evident that we are in an uptrend.
Yes, for sure. We're definitely
we are in an uptrend, everybody. If you were hiding under a rock.
Yeah. Oh, there's the all-time highs. That's not far, right?
No. And I will say, this is the continuous chart. It's better for the shorter time frame, or I should say, if you're looking at like the last week or so, to look at the September contract specifically. So on TradingView here, it would be ESU 2025. But because that chart matches up more with the SPY, the cash markets. So. But yeah, all-time highs here of 66 ish.
61, 66. Yeah, but those are pretty strong bullish candles, right? If you those two, compare that to just in the ATR, that it looked like slightly above average, right? Because just before the last two bullish candles, you had look at that chop going on. There's like 4 or 5 days of just kind of indecision almost.
Yeah.
And now it's finding direction. So it's likely to make new highs, right? Do you agree with that?
Yeah, I would say we will either see a little. There's 3 conditions. I think. Let's start out with all the scenarios. Maybe I think there's one, you continue this massive bullishness, we break out, and we just aren't looking back. We're looking at, getting to 60, testing 6,200, maybe consolidation, continue going. Everything is great and dandy if that occurs. But then the other situation is maybe a pop above the all-time high, failure, and then a retracement back down for a little bit of digestion, still in a bull trend, but a little bit of a digestion, trying to auction out the feelings, as I might say, and then maybe continue higher, and then 3, maybe a test, and then just pure failure, and then we possibly look at breaking out of this kind of bullish uptrend channel. And I would assume if that was to occur, there would be something relatively larger going on in the background, maybe another headline, maybe positioning is just too heavy for some of the commercial players or the big time managers. But yeah, I think those are kind of the 3 general scenarios we'd be looking at.
Yeah. And now, just out of curiosity, you trade the 5-minute time frame, right? Just to be clear.
Yeah.
But that's what you. Yeah. Okay.
I trade
you look at volume and stuff as well, right?
Yeah, so in the market profile charts, we're looking at volume on a daily basis on like 30-minute time, little timepieces. But I'm also looking at volume on larger levels too. Like you said, where the top down approach, kind of look at the daily, then look at maybe the 4-hour, the 1 hour, 30-minute, and then I'm going into 5 and 1 minutes when I'm just trying to intraday trade. I have all my levels planned out based on the higher time frames, but then we're trying to make trades based on how the intraday is reacting with those marked out levels, those bigger levels.
So when you scalp on a smaller time frame and you've got your levels of your key levels, if I can put like your support resistance levels, and you have a bias, then when you scalp on the smaller time frames, would you scalp where it's likely to kind of gravitate towards, like the level's likely to gravitate towards? Does that make sense? Like you've got to say in the middle of on the longer time frame, say 4-hour time frame, you've got a resistance above you and a support below you, but you do have a clear bias because of, say, for example, a clear trend.
Yeah.
Right.
Yeah, exactly. So, there's a preference. There is a preference. So if like we're in an uptrend, a general uptrend on the daily, the 4-hour, the 1 hour, the scenarios to the upside, I am more, I prefer more. So I'm looking for those more to be actionable upon. But if something big is to happen where that invalidates, it's just an immediate, got to switch the mindset, got to look towards the lower levels for possible like targets and see if risk reward makes any sense based on whatever level, current small level is breaking, and if I can get in on a short where I would be getting out versus where my target would be. So my stop versus my target would be. So, because right now, like I like today, going into today, I want a bullish setup. I don't want a bearish setup. But what we're seeing is more digestion, like small bearishness occurring. But the crazy thing is we haven't even gotten to the overnight low. So it's like, now that level that I've talked about at like 61.47, getting short there, that was starting to look nice now because we're getting down to that overnight low of 61.38. But yeah, so that is why it's tougher to take a short, I will say, and given these circumstances, because I don't want to fight the upstream salmon here. I'm not trying to do that.
You don't want to walk down like what do you call those stairs? Those kind of elevator stairs. What do you call them?
Oh, the escalators.
Escalators. It's going up and you're trying to walk down. That's what it's like, right?
Yeah.
I call them uppy stairs.
Uppy stairs.
Down stairs. Escalators. I couldn't do either.
The lazy man's chairs. Yeah. Well, you've obviously got two moving averages there. Is that the 50 and the 200?
So actually, yeah, this is not, I do not have the 200 up. I usually add that when I'm looking at like, I don't have it on my chart all the time because I'm usually just saving the 200 moving average for those like higher time frames. I'll usually just add it right here when I need it. But it's the 21 EMA and the 50 EMA. I use those a lot for by shorter term. Right now, I'm talking about like within the last like few weeks, I will look at those for more trend following. And then for if you really want to get into like the last week of trend following, like the 8 EMA is relatively good, but things get tight there, right? If an 8 EMA is being followed, things are getting super tight. So I typically follow the 21, the 50, and then if I see massive pullbacks occurring, I'll take a look at the 200 and see if we're getting close. But
okay, yeah, I mean that's I mean just by looking at that chart, that's a daily time frame. If you look at this is obviously no, sorry, which time frame are you now? You can.
I'm on the daily. I can change it for you.
Oh, okay. No. Change it. Change it there. Change it back to the daily, even though you're already on the daily. Change it right now. No, if you look at that, really steep drop there, right, and then you had that pullback right to one of your moving averages, and then that drop to that very like the lowest point on your chart right there. So if you can you draw a line just on that pullback before that big drop to the very lowest point of your chart, if that makes any sense.
Okay, so you were saying right up here.
Where's your cursor?
Can't see your
cursor. Oh no, the drop just before that. Yeah. Okay. So on the left.
Okay. Yeah. So right here.
Yeah. Right there. Yeah. That's no. So just a horizontal line.
Oh, okay. Gotcha.
Yeah. I mean, look at that beautiful retest, right?
Right. Up shoot. Oops, sorry guys. I thought you wanted me to do a trend line, so I picked the wrong.
Don't get into construction.
My family is a big construction family too, so they would be disappointed right now. Shoot.
Well, that's beautiful, right?
Right.
If you see something like that. Now, obviously, this is the daily, so that would be a longer term play. But if you see something like that on the 1 hour, oh man, with like a bullish bias on the longer time frames, this is a beautiful setup.
Especially after you see this big, bullish candle here after all this selling, and then a little bit of that consolidation there. The only thing is, I will say, I can see people overanalyzing though, like understanding that we're in an uptrend here, right? Like you got to really pull yourself back here and understand, okay, we had a big down move and then we have a pretty clear bullish uptrend here. I can see people getting scared of this doji candle that occurs during this consolidation.
Oh, what a bunch of wusses. That is psycho. No,
but genuinely, it's true though. Like people will be afraid, like, oh, maybe we're taking a turn for the worst again after seeing like a doji candle like that with a decent bit of volume. But you got to remember, we just went through a huge down move and then a massive buy up
correction.
So this was a great, longer term if you're trying to get in for multiple days. Really good risk reward here.
You're absolutely right. But just to get back to the point of being scared, like, look, I always say, like, if your setup lines up, you got to take it.
Mm-hmm.
You got to take it. But if you're scared of a loss, you need to maybe go back a few steps and just remind yourself that you trading, there will always be some losses. So to stay back because you feel like it could potentially fail, and then it turns out to be the biggest runner of the year. Do you see what I mean? It's like if it lines up and it makes sense and it's clean and it makes sense, take the trade. Now, so on that particular trade, I know it's the daily time frame. Now, ideally, as I've mentioned, I would love to see that on a smaller time frame if you have a strong bullish bias on, say, the daily, like over here. But then that price action there, that very strong bullish candle coming off that support, you do not need more than that. You do not need more than that. That's your signal, right? And that's it. Okay, key level. strong bullish candle coming off that level. That's it, right? Now, obviously, it doesn't mean it's going to work, but my point is when you get a setup like that and it lines up and it makes sense, you take it. And if it doesn't work, then so what? The next one, if it looks exactly like that, you take it again. You know?
Yeah. And also,
anyway.
and you know, maybe if someone is feeling like they don't want to take that because they're afraid of losing money or losing in general, that's where you have to start assessing your or maybe are you trading too much volume? Do you not feel comfortable with any mini contract? Do you need to scale to the micro to get used to that feeling of taking the trade, and maybe that risk is a little bit easier for you to stomach, or maybe you do that and you feel like you just aren't even you feel like you're too trade happy with the micros. Then maybe you have to take a step back up to the minis, or maybe trade 5 micros, a half of a mini. Just understanding where you're starting to feel comfortable with size, and then developing that natural process of trying,
natural awesomeness, yeah.
Trying to develop that somewhat, a natural immunity to like fear, or just awesomeness. Maybe that's what's required. But I do feel like people get too big too quick, then it starts messing with their process, and we got to stay away from that. We got to manage.
For sure. Paul, what do you think about that setup? Do you think that's something you would be interested in when it comes to that level of support that we just showed and that strong bullish candle coming off it? Or would you rather want to see more than just that? Just assuming that, the overall bias is bullish.
Well, it's contextual. So I'd obviously have to see in the moment, but I'm always
That's why I'm adding that little bit of crucial information for you. Assuming
but I mean, it's a sensible place. It's the first start of the plan, and then you build from there, right? But it's obviously dependent on what happens next. But I'm just looking for probabilities in my favor. So I'm if that level lines up with the necessary retrace, which is expected, all that kind of stuff, then it's great, it's gold. But I think, as you said, the key thing is to just, you've got to have it clear in your mind what you're looking for. You have got to have clear in your mind what you're looking for, and then everything just gets easier because everything's a no by default, right? Until it's a yes. And I think beginner traders, it's more of a yes before a no, right? And that's the whole game. So, but I agree. Yeah, looking pretty good.
Okay, awesome. Yeah, but now the other tricky thing is the challenge. If you were to take that trade for a longer play, I mean, you still definitely could have made money, and especially if you scaled in on smaller time frames. So, for example, the 1 or the 4 hour time frame. If there were opportunities setting up for like you just said, Paul, it needs to make sense. You need to know what you're waiting for, and if those were lining up, or the smaller time frames, you can add to your position as long as you treat each and every single position independently from the previous one. You don't just add for the sake of adding, or just because it's going up. Excuse me. Right? But the challenge here with the S&P 500, obviously, in terms of expecting a bigger move, is that resistance. I just don't. I feel it's a mistake to assume it's just going to break through a key resistance level, right? Trading it towards the resistance level and getting out before it gets to the all-time makes a lot more sense than holding a position and say, the resistance is definitely going to break. No, it's not definitely. You don't know it's definitely going to break, right? It could just struggle there and fall short, and then range to the side, especially if you're in a longer-term position. And you use leverage, then those swaps can eat you alive. But there's no swaps on the indices, I don't think. But anyway, you get my point. With all your, hey Robert, nice to see you. With all you guys were just saying, do you think that I did okay and it was just unfortunate day? Oh man, that rhymes as well. What did you say before that? I'm here. I was doing some work and took a max loss because my Dumminess decided to take trades that looked okay, but really wasn't looking at what the price action was doing on Newsday. Yeah, look, I mean, can you not max loss? I assume you're talking about like, on your personal max loss, or like your max loss on a prop firm. I assume it's like max loss on your prop firm, right? You need to have your own. You need to have your own personal max loss that should be like half the size of the prop firm's max loss.
I think the point, which is, I think, based. Correct me if I'm wrong, Robert, but it's you're saying you weren't really looking at what the price action was doing on a news day, and I think you probably answered your own question. I mean, you got to look before you leap, right? And we all make those mistakes. We all just sit down, we try and do a trade, and someone distracts us, and we do have those issues. But one of the whole point is we're trying to establish discipline with ourselves, and we're human beings. It's very hard to wrangle ourselves. But I think that's the answer to your question. I think it was an unfortunate day, but it didn't need to be. I've had unfortunate days, and half the time they don't need to be. So just look at what you did wrong. Look at what you didn't check, and then move on, journal it, whatever, and then move on and learn from the mistake. And that's it. We're all traders. We all do the same thing. We all have bad days, but most of my bad days are because, as you said, of dumminess, of Her Majesty's dumminess coming into my mind. So yeah, just learn from it, take the hit, and just move on. But always look before you leap. Always have a good look, right? You should be putting more time into planning significantly than you are into executing your trades. And if it's the other way around, then that's the problem, I think. But live to fight another day, Robert.
Yeah, but like you said, Paul. Yeah, Robert, your answer is in your question. Yeah, your answer is in your question. Yeah, don't. I mean, the thing is, you really need to look at trading like, and this has been said many times before, like a business. Okay, imagine you running a business, and not necessarily your business. Say you're the CEO. Okay, there are stakeholders, and it's listed on the NASDAQ or whatever, right? Will you make decisions like that?
You're going to have a board meeting. You're going to have a board meetings, right?
Yeah. So when they say, everybody says like trading is a business, you really need to take it seriously. I wasn't really looking at price action, so you're going to go bankrupt, right? Or like if you're the CEO, you're going to get fired. For sure. Like,
Robert, you're going to go bankrupt, but I think we're talking principally. So
not you, Robert. I'm talking.
You're going to be extremely successful, of course. Yeah, because you're great.
Yeah. So when you do take it like very seriously, like you're gonna have to, you need to do what. But what's the biggest problem with trading? Like, especially when you trade on your own, is that lack of accountability. Like, compare that to if you work for a company and they give you a task to do or whatever. You better get the job done, or you need to do a presentation, for example, or whatever the case is. You can't just pitch them and say, no, I don't know, man. My favorite soap was on last night, and it was the finale, and I didn't want to really miss that. Like, sorry? So it's that. But in trading, because you work, by yourself, it's that there's no accountability. You don't have to report to anyone, right? So you can make these mistakes, and you think you're getting away with it, but you're just only fooling yourself.
Yeah,
right?
I mean, look at like footballs, and I hate to talk about footballers because honestly, they're a bit irritating people in my mind. But if you're yeah, it's just because I can't kick a ball. That's it. I'm just angry about it. I just can't kick a ball. My dad tried so hard, or not, but
not hard enough.
You look at, say, like the England football team, right, which is renowned for being a bit frustrating, right? They'll get together, they'll have a training session or a couple of training sessions before they've got a big game, right? If any of those don't turn up to those training sessions and they just walk out onto the pitch, I can guarantee they won't be playing properly, right? And they'll probably lose it for their team, right? So it is all about preparation. And if you're busy, that's okay. I'm busy all the time, and I don't trade when I'm busy, and it's a simple rule. So if you're busy, don't trade. That's it.
Mm-hmm.
Yeah. All right, Robert. That's not a whooping. That's just some advice there. Yeah. Yeah. It sounds like I'm fishing for you. Did the right thing, knowing I didn't.
We've all been there. Trust me, we've all been there. We all do it. We all do it. So we're all part of the same.
It's the truth.
Yeah, we all do it, but you're gonna have to learn from it, right? And try to minimize it. So you need to learn to suck less, basically, right? That's the kind of goal. Like if you can say by the end of next week, you know what, I sucked less than I did last week, then that's a great improvement. And just kind of suck less and less and less, and then eventually you'll go past that, that middle line, and then you go towards the other side.
You want to be a broken vacuum cleaner at the end of the day.
Henry.
No
broken Henry.
Man, what a metaphor. I am perplexed by the metaphors.
Stick around, Gallo. Stick around. There's plenty more to come.
I'll tell you what.
All right. Well, that was very good. Thank you, Mr. Gallo. I'm sure Paul has plenty to share with us when it comes to Bitcoin and the altcoin market. Please, Paul, if you don't mind.
Well, while we're on the subject of Robert, let's have a look at Sol.
Oh yeah. Oh, you're just rubbing in Sol. Why he hates Sol? You know that.
I'm trying to encourage him to be okay with Sol. So we'll run through a few altcoins at the moment. Obviously, it's difficult trading conditions at the moment for a variety of reasons. But this is Sol. Now, there's no particular trade opportunity at the moment. Arguably, if you're trying to get back on the horse, Robert, with Sol, then we do have this support area. But it's you could look at it and you can say, oh yeah, it's got loads of touches. It's really strong. But just remember that this support level is only going to hold if Bitcoin lets it hold, right? Do you understand what I'm saying? So it's very important to just have multiple confluences. And this level, you just don't have it. So it's a waiting game for Sol. But the only play at the moment is to essentially wait for a break of the 200 MA with confluence with the same break of this pattern. I don't know why I put descending triangle. It's a descending channel. Sorry about that. Having a senior moment. And then look to come in with confluence here with this upper support line. So it'd be something like this, right? But the issue, of course, with that, as some of my fellow traders probably see, that it's just not bullish enough to come in yet. So there's only one scenario at the moment I would want to see for Sol, and it would be this: you have a breakout, right? And then we break through resistance. Bullish signal brings people to the market. People start paying attention again. And then you're coming down with confluence with the moving average following the breakout. So you got a bullish breakout of this pattern. You got a bullish breakout of the 200 MA. We've broken up with resistance. But of course, because the market's a bit hesitant, it's probably not going to have legs for a little bit. It comes back down, nice reset, and then you enter. That's the play, right? So if you're looking to get back on the horse with Sol, keep your eye on this particular setup. And that's ideally the best place, the best way to trade it. But that's Sol. But waiting game. But again, just plan it. Be patient, right? If you want to get, you've obviously we have some bad experiences, right? Just look at it differently now. Just look at it like, okay, so I'm going to be in control with Sol, right? I am not going to chase it. I'm not going to try and buy anywhere which I'm not comfortable or doesn't have confluence. I'm definitely going to look at the chart and I'm going to say I need a higher high. I need to break resistance, and then I'm going to come in here with confluence. That's it. Follow it, and I'm sure it will be helpful, a helpful process. But then this is the thing: it should be a no until it's a yes. So unless you see all of those things, it's a no trade. But if you do see all of those things, you've got buyers and probabilities in your favor, regardless of what's going on in the market. So I prepared that for you, especially. So it's just there. Feel free to take a screenshot. And I look forward to the day, maybe in a few weeks, where you'll come to us and say, I had a good trade with Sol. And then that'll make us very happy. So that's that. But let's just have a quick look at the state of the altcoin market, which is not good. This is just whiz through a few. This is sand, just nothing to trade off, just very weak, really struggling, trying to find its footing, but it's down here in this very awkward place. nothing really to trade. It's a waiting game. Same here with this main coin Ape. We didn't even get the short entry because it just wasn't enough bullish momentum. And now this moving average is creeping down, making it very difficult to do anything because we're in the middle of no man's land with resistance just chasing us, right? So again, this is the state of the market, very challenging right now. But what we're looking for, of course, we're looking for the few setups which are drawing people's attention to them. So the ones we've just looked at are not that. And again, we can continue. Here's Pepe. I mean, look, we broke the 786. It's really struggling in the pattern against probabilities. Just nothing to trade off here. The volume's so low. There's just nothing is giving me confidence to enter. Same with here. Everything's falling apart. Patterns are falling. We're getting resistance overhead now. It's just terrible. So, but if we look at Uni, right now, Uni is slightly different because we've got a lot of volume, right, which is a good indicator that people are paying attention. So if we're going to trade anything, I'm going to be looking at setups or at least tokens which have got some attention as opposed to the majority of the market, which doesn't. So not a particular clear setup in terms of Uni at the moment, but at least it's holding its own a little bit and it's not bleeding. And there's a bullish context still in play, higher low, higher high. And these are the sorts of setups you want to be paying attention to while the market is difficult. So if you are scanning through stuff, and I know there hasn't been a top altcoin picks video this week, I assure you they'll be back next week. But this is the game, and you have to definitely look at the charts. You have to definitely filter through them in order, especially when the conditions are like this, to get probabilities in your favor. But even again, we don't have a good setup just yet, but this obviously has potential because it's still got a bullish context and the moving averages are below us. And we've got obviously the support and confidence we need for a potential trade if Bitcoin plays along. But this one is an example. So obviously this is quite an important token. This has a lot of connections on the blockchain with main coins and so forth. And as again, we've got some volume here, we've got some attention, we've had a higher high, a nice move. We've had now having a golden cross in the 12 hour. So this is something we can trade, right? We have some support here, we got some support here. It comes back down. That's a significant retrace. We come in with confidence with these moving averages. But this sort of setup is quite rare this week, right? So you've got to be very selective. And even so, we're not trading it now, right? We have to wait for it to come back down here. So Bitcoin has to do something. So it's a waiting game, nothing just yet, but this is the sort of setup you want. Something with a bullish context. You can see, despite all the pressure in the market, it's curving round, right? The trend's changing, and that's what you want to be trading. And likewise, this is not a good example, right, of a setup. We're looking at this yesterday, except for the fact that the only thing going for this setup is we're at the floor. We're at the all-time support, right? And that's the only play. But if you look at the bounce we had off support, no volume, couldn't even make it out of the pattern, which means people aren't paying attention to it. Therefore, as a trader, if you're looking to trade wormhole or get lost in it and end up in some other galaxy somewhere, I don't know, whatever,
Yeah.
you're going to need to see something else, right? Because sure, we can obviously trade the first touch of a all-time support line. That's fine. And you could have had 23% or so here, but it's in, out. It has to be because you've got nothing else. And now it's touched it once, you haven't got another play. So what do you need to see? You need to see a confirmation of a trend change. You need volume confirmation, which would have to be something extreme like this to bring people into it. And then you've got something you can trade or play with, right? But this is just dying a death, despite the fact that it's down here. And if you look at the price action, right, a bounce at a first touch of kind of the lows, that should be something like this, right? And it's not, which shows the state of the market at the moment is pretty terrible. And likewise, I mean, this is Pengu. It's just, I mean, you could short this probably, right? I mean, I'm not sure. I can't really see it breaking out at this point, but it's short trade. Really, most of these things are shorts, right? But even those are difficult to line up because when everything's waiting for Bitcoin, when everyone's waiting to see what happens, the whole market just freezes where it is, right? It just, regardless whether it's in a good position or a bad position, it just freezes. And then we've got to wait for it to unfreeze. So not great at the moment, but there is, I'll just touch base with Bitcoin just very briefly. I mean, just, you can see we're doing fine. We had a nice recovery from this bear trap and we're still in this pattern. But again, we're not at the top. Here's, approaching all-time highs. I'm not going to short it from here, right? So maybe you could look for a bounce in the 618, but it's not a good price action, right? And we just need something else, which means higher high or a move back down here. So you can buy the 1-day 200 MA or rather enter an all-coin long trade when it does this. So again, waiting game, unfortunately, but I did want to just show you guys it. And again, this cup and handle, speaking of cup and handles, this is invalidated in my mind. I mean, do you guys?
Definitely.
Yeah,
no, for sure.
Yeah, and
Yeah.
This is I was talking to one of my students again about this today, and it's like I've seen so many cup and handles are super powerful, but the last move, the final move of a cup and handle makes or breaks it, right? And if you just can't get out, then it rolls over and it's done, right? And then you need to have another context, a straightforward resistance breakout.
Yes,
right?
back to the drawing board if it fails. Yeah, because really, if it breaks out of the initial lower point of the handle, the upper trend line, or the upper channel of the handle, it needs to first break the high of where the handle started. Yes, it needs to break that, and then you can. That's when you confirm the cup and handle pattern. So obviously that didn't happen there.
Yeah, I mean, and this was the last hope, right? The breakout of the handle. This was it, but it needed to surpass that high. And again, you need to know what you want to see, and therefore, this doesn't mean Bitcoin's done. This is just one. This is just one pattern which we were paying attention to, but it's invalidated, so we can't pay attention to it. So I'm just going to go bye-bye, right? See ya. Close without saving. I don't want you anymore, right? But let's have a look at it. I want to show you this before I just finish. This was my student showed me this, and interesting topic of conversation, right? So just to clarify that this is the bottom one is exactly the same as the top, right? Now he showed me this, and I mean, curious without me saying anything. This is Bitcoin dominance, by the way. So obviously this is wrecking altcoins. But guys, what do you see? What do you think of this? Right?
I see a rainbow.
Yes. Yes.
But I've never drawn anything like that on my charts in my life.
This is new to me for sure.
How do you?
I'm very interested.
How do you get it so perfect? Like, how do you draw that thing in the first place?
Well,
like, what tool do you use?
Well, this was the in TradingView. This is just the arc tool, and a curve tool. Excuse me.
Never used it ever. What about you, Gallo?
Never, but I like it. I like it. It feels good. I'm excited for this explanation. Honestly, I'm very excited.
No. Well, this is a learning thing, right? Because,
exactly.
But the first thing to realize, this is the weekly, right? So this is 2020, right? The last time.
Oh wow, I was very young back then.
Yes, sure you were. So, I mean, we've got 1, 2, 3, 4, 5 flush touches on the underside, but really only 1, 2 touches on the upper side. Now, bearing in mind that until this retraces, we haven't got confirmation this has been retested. This has been is that being respected, and this is 5 years ago, right? And I'm like, I said to my student, I'm like, I think it's going to reverse from here, and I'm like, okay, is it? I mean, how do you know that, right? Because we as humans, we like to see these patterns, but how many other people are trading off this, right? Because, I mean, is it more powerful than this level, right? I mean, I can see it going up here, right? And then what do we do with this pattern? And I think when we talk about the head and shoulders, excuse me, the cup and handle, it's very important to look at multiple perspectives, find multiple perspectives, and of course, but recognize that this means nothing right now, because this is years ago. This means nothing right now until you have a sign it's been respected. Now, this would be disrespect, right? Okay. Now, this would be respect. And then you've got something to trade off in the future, right? But not yet, right? And that's the point. So this is pretty much nonsense as far as I'm concerned, right? Yeah. But it's just a human condition trying to find a pattern. But nonetheless, but if we do get rejection here, then we can call it the rainbow pattern. Yes?
But that feels to me like you're desperate to kind of make something fit.
Exactly.
Right.
Exactly.
You know,
yeah.
like how people it's like you adding all the different indicators available to you until you find one that say, okay, well, this one says it's going to go down, right? Yeah. No, this one doesn't. This one doesn't. Oh, that one does. You know, like
because look, I mean, why is it here? It could be here, right? See. Right. Yeah, I mean, it doesn't change anything other than I've just put it there because the price action is there. It's not respected yet. So I just thought this was an interesting exercise in understanding ourselves, and that just because you see a pattern doesn't mean it's a pattern to trade off, because it could just, again, I've put that there because the price action is there. If the price action was a little bit higher, I'd put it here, right? So you've got to see if the price action interacts with it first, right?
Of course.
For sure. No, I agree. I've never used that. I mean, that just looks, Yeah. I mean, can you draw one arc and say, use the same exact kind
Yeah.
of arc
Now this
and
is,
say,
this is the
position
thing.
it?
Watch this. This is the thing, right? Now this has got some touches. This has, I mean, this arc can move a little bit, right? But it's a little bit more substantive. Copy paste, and it does fit if you just line it up right. Right, it does fit.
No, but
right?
you've moved it to the left now.
Well, yeah. Again, I mean, I'm not a scientist.
Are you allowed to move it to the left and the right?
Do whatever you want. But
Well,
that's the point. That's the whole point.
Yeah.
You can do whatever you
Yeah.
want, right?
Yeah.
Oh my goodness me.
If we
Oh dear.
could we look at the
Sorry.
cup and handle real quick again of Bitcoin?
I mean, the
by
one I
chance?
killed. Oh, I'm not sure I can find that now. I
Oh,
killed it.
dang.
I
Okay.
killed it. Let's see if I can find it.
Son
I
of a-
don't think I labeled that one. Let's have a look. Let's see if I can find it. So many, hundreds of Bitcoin charts. Oh, I don't think you're going to be able to find it. See,
No,
some are
it-
labeled. Oh, it's not a chance in hell. I don't think.
Don't worry about it. I want to show you I'm sure a cup and handle, or maybe it's a debate. Well, I want to show you guys the gold chart.
Okay.
Let's
have a look.
This is fun, I think. This compared to that Bitcoin one right now. So
Yeah, so basically, Paul, your Bitcoin chart was very boring. So...
no. No, it's going to be a compare and contrast. Okay, back in 2019, this is the weekly chart on gold. I was making this trade literally every week in options on gold. In 2019 on this upswing here with what I was considering a possible cup forming to meet this all-time high. When we were like right about here, I had seen kind of this base out occur, and then we were starting to like accumulate, and I was basically selling at the time I was selling puts in the gold ETF GLD, and then getting exercised, then selling calls, getting exercised, selling puts, the classic wheel strategy as some call it. And I was doing that all the way up from like 1300 all the way up to 1800 or so. But the reason why I wanted to bring this up was because compared to the Bitcoin chart with the cup and handle, and we're discussing how cup and handles can break down or form and whatnot, would we have considered the cup and handle dead after this topping tail here and then the breakdown below this low of this seeming handle? Or do we look at it like, hey, you just needed a little bit longer term of a time frame here to create a little bit more established handle to then get this big break to the upside? Because this is a good one. I love this chart. I love looking at this chart. Reminds me of my successes in gold back in the day. But
yeah, no. When there's an this one's a little bit ambiguous. The neckline's a little bit ambiguous, right?
Yes, because
right.
I mean, there's a bit of because your handle is above the high, right?
Yeah, but I think
Yes.
the important thing certainly in crypto, right? The important thing to recognize is that obviously, the cup is a reversal pattern, and it's reflective of the psychology of traders moving the price action, and that doesn't go away. And what you do have, unfortunately, you just at the time when it's about to break out and confirm the pattern, which could then bring more buyers in, something bearish in the market happens and it invalidates. So it can obviously still recover because it hasn't invalidated all of the price action which has come before it, right? That has happened, but it just means that you have to look for other things now as well.
Right.
No, okay, so there's a cup here. It almost did it, but something bad happened in the market. But so it looks like it wants to move up a level now, but you have to look for something else to trade it. And I think this is a really interesting example because you could argue both that it was invalidated. You could argue that it wasn't because of the ambiguity of the neckline, right? And then as long as you know that there's some traders which are going to think it's still in play, then it's something you can trade off. But I mean, that's my take. Very interesting.
Very
interesting. I think you both hit it on the head with like the analysis there. Like it's very true because it's not like a true to form theoretical cup and handle. There are a lot of other smaller details that mean a lot, especially like the handle being a little bit further up on the neckline and whatnot and everything. So but like you were saying, things get a little bit more like into the minutia of this drop down here is just coming into area where volume was being transacted over here a few 5 years ago, 6 years ago, whatever, where big auction processes were occurring. So basically there's just a lot to unpack. I like that where the true cup and handle doesn't form, you got to look for other strong confirmations to get back into the long trade. And
yeah, the thing is, like, you don't just want to see a cup and handle in the first place, right? Remember, it's all about multiple confirmations on multiple time frames, right? So the cup and handle is not necessarily the only thing you'd be looking for. Obviously, you may spot other things like, wow, it's a very strong support level, for example, on the daily, and you ascending triangle on the 4 hour or whatever the case may be, and then you go small on the 1 hour. There's a double bottom. Do you understand what I mean? So it's more than just one single pattern that you're trading off.
I mean, the interesting thing about that price action is that when you get that lower low suddenly on the right, just as the price action then it has to just climb back up the steps. It's got to then retest previous resistance, which it then does. It can't really put in. It looks like it eked out a higher high, but then it has to come back down, then establish a higher low, and then once it does that, it's away again. It puts in a higher high, and it's not. So it just sets things back. But by that point, you're trading.
It's like a dominoes effect, right? And you'll see it, on the, maybe like you said, right? So this is the weekly time frame. The picture, or like as Paul always says, like when you look under the hood, you look at the smaller time, because obviously the weekly time or the daily time frame, you can see 5 candles instead of just 1. And then if you go on to the 4 hour time frame, and smaller than that, and nothing smaller than that, hopefully. But no, you can see it busy, like especially with the strong bias. The dollar index is a very good indicator for that. So why are you smiling there, Paul?
I was just reading Robert's comment. I think he's making a Highlander joke again, suggesting I'm immortal. I'm so old, that's why I can chart so quickly, because I've been doing it for millennia. With Sean Connery, apparently.
It does look exactly the same. I found a picture of him that was from 1953. He looks exactly the same.
Yeah, I was potato picking in Ireland that year.
Tiger, nice to see you, mate. Did you take that gold trade, Tiger? We were talking about the gold trade that you identified, or potentially. I don't know if you took it, or if it's even the level you identified. I can't remember. But anyway, all right. We'll wait for a Tiger's response before we say anything else. Okay, yes, still on.
We've got divergence again in the Dow and the NASDAQ, and then the S&P 500 is just chopping around. It is consolidating right now massively. So very unclear where we want to go at the moment, it seems.
Yeah, we're just waiting to see. We're waiting to see if peace will find its feet, essentially, which we hope it does.
Oh, yeah. Tiger Berry, yes. Yeah. But I mean, do you think that will have any kind of impact on Bitcoin? I know Bitcoin is like a lone wolf lately. Definitely this year, it hasn't been really in sync with anything or in correlation with any other markets. It's been kind of doing its own thing.
I think it's like, can you kill Wolverine? Yes, it just takes a bit, right? I think it's like Bitcoin's like that. I mean, it's resilient, it's strong, but I mean, if we have 6 months of terrible chaos in the world and fear, uncertainty, and war and destruction, which is just horrible to think about, then Bitcoin can fall too, right? But it's only strong to a point, right? And that's the issue. This is the issue with the altcoin market. We just haven't had anything letting up to allow things to move beyond the first 1.5 moves, and then it resets, right? So Bitcoin is resilient. I'm sure it will be, and I'm sure it'll be a great asset to a degree, even if things go terribly, because you got to think about it. If economies, financial situation, I mean, I don't want to get into the whole minutia of all the horrible things which are going on, but when there's war, moving money around, and you think of Russia and all the sanctions, right? They're turning to Bitcoin. right? To get around it, right? So why wouldn't Iran, why wouldn't other countries, etc., do the same thing? So you never know. It might be good for Bitcoin, but it's not good for the world, and therefore it's not good for me. But so we'll see.
Yeah. Well, if they all do go to Bitcoin and then they've got these supercomputers and they go, oh, let's screw all those countries up. They're only using Bitcoin. Let's crack it.
Yeah.
Oh, no. Oh, no. And then everybody will be trading in bronze and silver and gold again, proper
Might be
metals.
Nice. Might be nice.
Yeah, or chickens for eggs and things like that. We'll
go
back
to notes in the wash. They're gone. If you put like a bronze coin in, it's fine.
You're right. That's a very good point.
Right.
I've got no comeback for that.
Nailing
That's a solid
nailing it today. I'm winning.
Oh, that's a very good point. Oh man, what's it like? Is it like? I don't want to talk about the weather because that sounds like Paul's got summer. I've got winter. What have you got over there, Gallo?
Oh, it's dead of the summer. It is hot. It is 95 degrees out in Orlando. A lot of pavement. A lot of black pavement absorbing sunlight. That's where I'm at. So,
man,
yeah.
You get all of these natural kind of, like tornadoes, things like that, or not really. I don't know.
Just the hurricanes, really. I mean, tornadoes.
Oh, that's it. Oh, that's not too bad.
Yeah. Just hurricanes and then also tornadoes spawning off of hurricanes. So that's essentially, but not like just genuine tornadoes popping up randomly. That's rare. It's rarer here. But
do you have like a basement? Do you for safety?
In Florida, there are like very rarely basements. It's all sand, like soil.
Yeah,
so
like a tree house. I've got a tree house for the tornadoes.
Some houses do look like tree houses. Yeah, that's the truth. I mean, but yeah, very. I mean, I can't complain though. Can't complain.
No, because Paul and I were talking yesterday, and he mentioned about the terrible winds that he came across there in the US. So, but that is
around where Tiger is, going through Oklahoma, places like that. I mean,
yeah. I mean that's also a different kind of heat too. So if you're outdoors in the heat, and then you've got massive wind gusts that are just like it feels like an oven is gusting into your face.
Honestly, as someone who lives in an island most of his life, and obviously I've traveled around quite a lot, and I enjoy living on the equator because it's just perfect climate. But I remember I had a really bad day. I can't believe we're talking about motorcycles. I'll make it really quick. Second day in a row, but it was like I woke up one morning. I knew there's a storm coming. I was in Texas, right? And my bike got stuck in a pit of mud, and I had to be pulled out for some hunters, and it saved me and the trip. It was fantastic. But then it was bad weather all the way to Oklahoma. And then when I got to Oklahoma City, I've never encountered anything like it. It was 15 degrees, right? And then I drove the bike through traffic lights, and it dropped to 3 degrees in 15 seconds. And then within minutes, I was in a torrential downpour, freezing and not knowing what to do. And the water was never encountered any kind of weather like that. Because of course, I've never been in the middle of a huge continent like that, where you get all of that. It's incredible. I mean, it's fascinating, but it was insane. I've never seen anything. Just crazy.
Damn.
Crazy weather, America.
I will say Oklahoma. I've never been to Oklahoma, so that is pretty wild. Because we deal with that in Florida, like crazy weather pattern, like not that cold, like that's more crazy for sure. What you just did, dealt with.
I just walked into a storm. I just drove straight into a storm. It's incredible.
Yeah. So when you say it's like you just open an oven, like how hard does it get there? Like you go into Fahrenheit, so I wouldn't understand. Like, can you do you know degrees Celsius?
Yeah. So well, in Florida, it's different because there's like a lot of humidity. So it's super humid. So it's not like an oven here. It's because it's just super sticky all the time. It feels like you're sticky. But when you go further out west and like into like the Midwest and like the Southwest and whatnot, and like it starts getting just hotter, and like especially when you get to like Las Vegas and stuff, it gets hotter in the sense of like zero humidity, but it's 115 degrees outside. It's just pure UV rays annihilating you essentially, and it genuinely feels like you opened up an oven door, but then you just left it open and it keeps getting hotter and hotter. So it's kind of funny because in the humidity, I like it, you can get kind of sweaty. In Vegas, like in places like Vegas, in the dry, areas, obviously you end up sweating at some point. But for whatever reason, my body is like used to humidity so much that like I wasn't sweating right away when I was in that like oven heat. It was just like super hot, and it took like probably 30 minutes when I was walking around Vegas the last time I was there to actually start sweating, because my body just like didn't understand that there was
last
no
time
humidity.
you were there, did you play some blackjack?
I did.
Doing that? Yeah.
I'd placed some blackjack bets, some roulette bets.
Well, that interests me as a trader who's also a gambler.
Oh, I barely.
Open
yeah. Yeah. Oh, I'll open. Oh, for sure. I will tell you though, unfortunately, I am not the super fun guy where I'm like, all right, let's bring X ridiculous amount of money and let's go have a great day. I'm like, hey, I'll gamble $100 and that is it for me. And then I will, if I make something cool, if not, that was my budget for the gambling day, and I will continue onwards.
Well, like you're on the 5 cent machine. What's that?
You're not going to attract the ladies to your table.
Definitely not.
No, $100 not enough.
There are other reasons why the ladies aren't coming to the table aside from the money, but no.
Nonsense.
I have a lovely wife. No, she's great. So
that's a good reason. That's a very good reason.
Yeah, exactly.
Does she know you gamble?
She's the one who made him gamble with $100, Paul. That's what happened. Yeah.
Yeah, exactly. I think she's the one who wants to do the gambling, but I'm the one who's like, oh, let's just keep it down.
Can I have $100? Marriage life, fantastic.
And I'm also, when I gamble, like if I play roulette or something, and if I am doing like $100 or something for the night or whatever, like I will literally do like, I'll go and I'll just do $100 on red or black and see what happens. And if something,
you're only taking $100 and you're putting it all together.
Yep.
Is it like a short trip sometimes?
And then,
you just walk in and straight out.
But then my friends will play, and I'll just like walk around, check out what my different friends are doing. I'll have a drink or two. I'm there mainly just for the vibes, as the kids would say. So
you're going to do like I'm joking, because I'm sure the casinos in Florida, but you're going to do like a road trip all the way to Nevada, and then you're going to be like, "Here's my $100, black. Okay, all right, see you later. See you next year." Right,
well.
Yeah. Sorry. No, I didn't think they would have like 5 cent machines in Las Vegas, but obviously they do, right? If you want to play with $100. That's
I mean, there's casinos like the Hard Rock casinos and stuff in Florida and whatnot, like that are down south and whatnot, if you really want to go to a casino. But it's been a long time since I have been. So
I mean, I would be worried. And I don't do stuff like that. I can't stand casinos. Don't get me started.
It's very easy. You just put money in the machine and you go.
My other half, she's really wants to do stuff like that, and I'm like, okay, fine. But the point I was trying to make is, do you find it difficult to like? I mean, you come back from the casino. Do you find it difficult to get your disciplined kind of trading hat back on after you've been like, red? I mean, do you find that difficult? Because I think
it's two completely different things. No.
Yeah, I do not. For me, I don't. But like genuinely, I'm not kidding, guys. I haven't been to a casino. It's been like 5 years since I've been to a casino. So before COVID, essentially, I do not do this often at all. But even when I have done it, I do not
defend yourself.
No, I'm just being transparent here. I'm just trying to be transparent. But I don't think it is, because like I said, I take it as like a small budget thing, and I'm genuinely, because some of those times ended up great. Like I made like $300. I brought, $75, $100. I made $300 on like 7 hands of blackjack, and then my night was done and it was fantastic.
So you went then you went back the next day and
no.
I think the point I'm trying to make is that, so just my other half, she's just recently discovered scratch cards and stuff like that, right? Lottery stuff, and she's also learning to trade. And when I'm trying to instill a mentality of, if you want to become a millionaire, you can put in the work, right? And you've got a shot, right? But you ain't got a shot with scratch cards, right? It's a game, it's a trick, it's manipulation. So I'm like, I don't know how to balance those two things, because they are in conflict with each other, right? The whole get rich quick and short repeated trades over time, right? I just like, how do you, and so I'm very protective of my own personal mindset and my students for that very reason. And if one of my trading students came to me and said, I've just been to Vegas, I'd be like, okay, fine, you're done. You know what I mean? It's,
Yeah.
No, but that's not true. Come on, man. That's too, like, the one is just pure entertainment, because exactly this, you probably not, it's just entertainment. The other one is not entertainment.
Yeah.
I could also see beginners confusing the two. If like you were a beginner trader and then you were also just getting into gambling, things could start to equate to each other. So it definitely is dependent. Like, we are senior traders of sorts. We've been in the markets for a while. We probably have a good ability to dissect the two and understand. But I could see it being a little bit of a mental block. Especially if they don't have a process. If the person doesn't have a process in trading, they'll especially start to get it more confused. But yeah.
I mentioned this. Tell me to shut up about this. But I know there's a bit of an issue with gambling in the US, in the apps and advertisements and sports betting, and you can do anything, and there's no regulation. It's completely insane. And so I look at it from that perspective. And I do, because if trading is successful, trading is about mindset. If you're hopping down to the shops to either place a bet on whatever the thing, I can't remember the big one that you have. It's like, I just can't equate the two things. You're getting like, you're making bets because you think if this basketball player makes this shot at this exact time, and he does this, and you're placing that bet. I'm like, how can you suddenly turn that mentality off into what it needs to be a successful trader? And I'm like, that was where my interest in the question lies, because it's quite fascinating. So.
Yeah, I can see people gravitate, like, getting riskier and riskier by participating in that kind of stuff frequently, especially with like sports betting. That stuff is wild. I do not. Unfortunately, I'm just not a bit about that life in general. But I know people that are. But I am not about it. But especially, and those sports gambling sites, those casinos hire traders. They're probability traders that are sitting behind in the back, calculating probabilities of certain things happening, and they are genuinely traders themselves in their own way, to create house edge to then be able to take money with a higher percentage likelihood than the customer. So that's an interesting situation.
Yeah, what at the casino's edge is very, very small. It's like 1.5% or something. It's very, very, very small.
Depends on the games.
But well, the tables they can either make a lot or lose a lot, but they typically, obviously, they make a lot, because even the people who make a lot, they just end up giving it all back, right? But yeah, they do definitely make. You're right. They make their money on the tables, but even on the slots. Oh
yeah,
DraftKings. That's the name of the big corporate, DraftKings. Yeah,
DraftKings. What do they do?
Nothing good.
Sports gambling.
Nothing good. Yeah, no, I've never actually. No, that was never something. Obviously, it's been around forever, but that's never something that grabbed my attention. You know. Oh, let me. Manchester and. What's the other one? Crystal Palace is playing. Who's going to win? I don't know.
Come to Hola Prime. Just put down DraftKings. Come put it down the app. Come to Hola Prime. We'll give you the best chance. Yeah.
Some good learning.
Yeah.
Yeah, from Monday to Friday. I mean, I don't even. I just don't have real time to watch the other two sessions, but I'm sure they're pretty great.
Yeah, I pop in from time to time. I mean, honestly, they're really good, and we should do better.
They are great. I've watched both of the other ones. They are fantastic.
Yeah, they're all great. Good team.
Well, there you go. So 3 sessions, up to 9 different coaches. I'm not sure how many coaches there are on the other ones. Yesterday there was just the 2 of us, Paul and I. But you know, up to 9 coaches every day. So Monday to Friday, and you can get some really good ideas, good trading setups, good ideas on how to analyze and approach your market. So it's free. So I think we have now come to the end of the session. And Tiger, it was nice for you to join in. You clearly don't have a life. That's why you're here, right?
I'm pretty sure he has a very, very good life.
I'm just teasing. But it was great to see you in the chat, Tiger. And Robert, it's always good to see you again, my friend. And everybody else watching, thanks for watching. The next session starts in half an hour from now. But from us, enjoy the rest of your day. And we'll see you tomorrow. Cheers for now. Bye-bye.
Thanks, guys. Cheers.
Hello, everybody. We are live. We're just going to wait for Michael and Aymane. They should be here any second. I hope everyone has had a good trading day, and hopefully we can add a few extra good trades. Aymane has just popped in. Aymane,
Hello, Sam.
how are you?
Good. And yourself?
I'm very good. We're just waiting for Michael. He should be here any second.
Yeah.
Oh, I know how your trading day went. Well, for most of it, I know. Here's Michael. Because we spoke earlier. I had a pretty decent one in the end. Finally caught a nice good short position.
Yeah, I saw it like from the top to the low. Like nice entry, nice
Very
exit.
nice. Very nice. Michael, are you with us? I think it's frozen a bit. I see his blue lights. So that's a good sign, right?
Hey, can you guys hear me?
Yep, can hear you now. Okay, so yeah, how was your trading day, Michael?
Do you guys hear me okay?
Yeah, I can hear you. But your cam is a bit frozen. I'm not sure what's going
It's
on.
been a little slow.
No problem. Oh, there you go. You're back. Maybe. Unless you're really still. It's hard to tell.
No.
Well, you try to figure that out.
Do you guys hear me?
Yeah,
Okay.
we can hear you. You try to figure that out. Me and Aymane will have a little chat about the trading day. Did you take any more trades after those longs, Aymane?
In one account, yes.
Okay. The bully account or
Yeah, the bully account. It was just a small scalp, but yeah, as I show you, I took 3 trades, scalps, finished with some accounts, and then I showed you the last one. I think this the buy from the bottom, but you know, Sam, I'm taking just a little bit. I'm not too
that was
greedy.
a lovely entry. That was a beautiful entry, I have to say.
Yeah. It was nice. And you took, I think, this like you took the short, the short.
Yeah, I shorted it. In fact, I'll pull up my screen. I'll go over the trades I took today and show the viewers. Hopefully, not Michael. Sorry. Hopefully,
I think it's
Robert's
go
here.
now. You guys hear me okay?
Yeah, we can hear you. So we had at market open. It was my first trade. I wouldn't say it was very good, to be honest. I mean, it was in profit, so it wasn't bad.
It seemed like it's a
was
crazy delay.
Yeah, there is. Maybe if you 2 seconds. Maybe if you jump out and then jump back in, maybe that sometimes helps.
Okay.
It's lagging a little bit for me also. I'm not sure. Can you hear me clearly, Sam?
Yeah, your one seems perfectly fine.
Okay.
Aymane, if you just let me know when Michael is, well, actually you wouldn't be able to tell. All right, I'll wait for Michael to come back, and then
no. If Michael writes on the private chat, I will let you know.
Okay, yeah. Perfect.
Yeah.
So the first trade I took pretty much at US Open, really quite a simple one. So I was looking at, where is the US? Here it is. So basically, right off the bat, as we opened, we saw that heavy kind of contracts come in from the buy side. As soon as we dipped back into it, I bought. But then we did also have this random push down, which I actually got out earlier than that. No. Sorry, I got out near the top. I didn't hold for that push down. That was a separate push down. It was only a few minutes to trade. So essentially, I got in like this was my trade, right? And I mean, it wasn't bad, but it could have been better. I think, no, sorry, I actually think, yeah, I got in on the actual 5-minute candle of the, so I got in here, and then we kind of just went up and down a bit. But then I took another trade. I'm just check if Michael's back in. Yep, he is. There we go. Then I took another trade later on. So I let all this play out, got off the PC, and then right here I took a trade, a lovely short position. Literally, this was the trade. And I entered 2 positions on that. So it was really nice. This one was really nice. There was a bit of consolidation, a bit of kind of, you know, it moved sideways for a bit, and then it just boom, 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 shot down very quick. It happened all very quick. And if I go to like the 1 minute, you can probably see. Yeah. So I actually got in a bit earlier. I think I got in like around here. And then I had my stops just above that wick there. And then I got in again as it came back for this retracement here. I jumped in again. So I had 2 positions, and I got out like at the top of that bullish candle there as we started coming back up again. So that was my trade. Really, really nice. Made my money. I was happy. And then left it at that. Didn't touch it again. Don't want to be over trading. But if in this session, if we see something good, I will absolutely be willing to jump in. So that was my trading day.
Yeah, the start of the day, like we talked, Sam, it was a little bit slow. It was a little bit choppy, but I managed to take a couple of trades. Let me show you.
It was really choppy. I didn't like it. Like I thought it would go a bit higher, but I just got out because I don't know. It was just very choppy. It wasn't nice.
Yeah, I think.
There you go.
Yeah, so I took actually. Let me show the zones first. So we were bullish. Actually, in the beginning I didn't want to sell. I didn't want to take any sell. But as you can see here on the 4 hour, we had, for me, I call it unmitigated zone. We never touch it. So you can see this area right here. So, like we took this previous week, close red, we had the continuation. So at the open, we had this big push to the upside, and we literally stop in this 4 hour supply. So I was more, let's say, I don't want to short from the top, but of course I took a couple of shorts. So because you have to adapt, and
yeah,
let's see. So I start the day with a buy. Actually, you can see here we took this previous week low, start to close green, and we start to push. I took a buy from here for a continuation. If I can show the footprint, it's somewhere here. So we had this 100 cluster at the top, so I was looking for continuation, and I think I got out somewhere here. I think I took break even in the beginning, and then I re-enter, and I don't remember the couple of trades that I took, but the one I showed you, Sam, it was, if I remember correctly, it was here. So we touched this 15-minute demand right here at 950. Yeah, it was somewhere here. So I saw just absorption. I checked also the 1 hour, the 15 minutes. I saw an absorption, and I saw also on the 30 minutes that we took this previous candle low, close green. So I was thinking about, okay, maybe we will just create failure here, like we will respect this week sort of, and then come back. But I took a buy, I think from here. I used the 30 seconds just as confirmation, took a buy from here, and I exit. I took, I think, 10, 12 points. And yeah, the market today is bearish, so no one expected that it will be bearish. The ATR is very low, so that's why I don't like when the ATR is really low. So you don't have much. I like to be in and out like 2-3 minutes, 5 minutes. So when the ATR is low, I have to stay. I should not move the stop to break even quickly. So yeah, but it was a good day. good day. Not the best, because now I have to adjust a little bit the contract size. So you can see now like the volatility is a little bit lower because of the ATR. So I have to adjust a little bit, see what suits me better for my style. So yeah, and we will be monitoring the chart like you said, Sam. Maybe if we will come back tap into this demand right here, it will be nice buy. Or I have this area right here, not this one. Yeah, here, this area here, I will be interested to short from this one.
Absolutely. Yeah, I think for me as well, I'm going to try and short it. We're right now at the low of the day. I want to see the low of the day get broken with a bit of oomph, bit of like force, and then a pullback into where the low of the day was, and then potentially short it again. So that's what I'm kind of keeping my eye out for.
Yeah.
We got Robert in the chat, but on a different account. He goes, "Morning, guys. This is Robert. I'm on my way to work. Kind of pissed at myself for attempting to trade while in the middle of critical work stuff." Oh man, Robert.
Oh no, that's never good.
It's all good. How's everything going, Michael? Is it
It happens.
The technical difficulties all sorted now?
Yeah, I think so. It's raining a little hard here, so I think maybe that was it. But I think I'm good to go now.
Yeah, sounds like that could probably be it. Robert goes, "I even had a small win before I started work stuff and said this was good enough, but nope. I didn't have ultra success Friday, Monday, and Tuesday, so it wiped out the last 3 days of profits." That's always painful when you wipe out not just your current day's profit, but previous days. Well, that hurts. That does hurt. But hey, man, you had a little slip up. It happens. Next time, just remember, if you're already up and you're not feeling, a real A plus setup, and you're not, for whatever reason, maybe you're working, maybe you've got some other stuff on your mind, don't trade. Just remember that feeling you have right now, that pain you're experiencing. Don't forget that, because that will stop you from making the same mistake in the future. So keep at it though. You're doing well.
For sure.
We're always battling every day. That's just how it is. You're always battling that demon inside you that just wants to do silly stuff.
Yeah. you use the bully account.
Yeah, or use the bully account. That's a good one. Always use the bully account. But let's have a look.
That always works. Just use the bully account.
That's it. Let's have a look at some of the market, some of the charts, see what's going, if there's anything good. I'm going to pop up my screen real quick, and we'll have a look at a few different assets as well while we're at it. All right, so what I'm waiting for on ES is a break through this area, come back, and then a trade down to here. So that's what I'm kind of waiting for to happen. It all lines up pretty nicely. We've got the low of the day right here. So we almost took out the low of the day. I want to see it, take it out, come back into it, and then a nice continuation down into this kind of gap area where I could potentially buy the market, depending on what the footprint says. So there's two potential trades set up. We're waiting for something like, that's way too big. Why does TradingView always do that? Why does it assume I want to do the biggest trade in the world? You would think it would recognize that I'm not a swing trader. Why would I ever want that? And then potentially another trade. Again, back up to probably like here. So those are the two potential trades I see setting up if we break that low. If we don't break that low, then, well, we're going to go back up and hopefully into this area where then there's another opportunity to short the market. So you got that opportunity then. But if it breaks through that area, then you have opportunity 4. So if it breaks through that area, you have opportunity 4 to potentially buy the market. So there's lots of opportunity. No matter what it does, there will hopefully be a trade, unless it just stays in the middle here and does nothing. Then there isn't a trade. So one of those scenarios will happen, and I will try and catch it. So fingers crossed. But we'll have a look at other. Let's have a look at oil. Actually, oil hasn't. I haven't looked at oil in the. Well, I've never really looked at oil.
Oil these days is moving. Wow.
Damn. Oil didn't like the. I'm assuming that's the ceasefire. Oil didn't like that, did it? Damn. Well, if oil's dropping, that's generally I like that.
Yep.
Cheaper fuel. More likely there's peace on earth. It's a good sign. It's a good sign. But in terms of oil, I mean, trading it, I can't see the volume profile on oil. So for me, I'm blind right now. Completely blind. I have no idea. I couldn't even, like, genuinely, you might as well show me, you know, one of those, what was it? Kagi or whatever. You might as well show me this. Like, no idea. Without the volume profile, I don't even try and attempt to figure out what's going on.
Like there is no footprint on oil, or there?
No, for some reason, I think there probably is, but I've tried every different version of oil that they have on TradingView. I can't seem to get it. So
maybe try WTE.
I tried that WTI, right?
Yes, yeah, WT.
Well, it's definitely not that. Oil futures. Yeah, but then it just looks like this, and that doesn't look right to me. And then no matter how, West Texas, WTI, crude, I mean, these exchanges, like, it should be, I'm not sure which exchange, but it should be COMEX, I think. Oh, no, it's gold. But I don't know. I've never traded oil in my life, so. And then if you just type in oil itself, I can't seem to find crude oil futures. Oh, that looks a bit more. Okay, there you go. Crude oil futures. Oh, I have actually played around with it before. I've got all these things. Okay. No, apparently oil does it. Yeah, I must have done it before. Didn't even realize. What is going on? Okay, so let's remove all that. Let's have a look at what's cracking with oil. So we had a push down here. So I do a nice volume profile. That's how I always start. I look for the last leg, right? And then I look for any gaps in volume. And we had a slight gap here, but that will be the most extreme one. Very slight. I'm sure if you move this up down to like 50, you would be able to pinpoint exactly where that. Yeah, there it is. Right. There is the gap. And then let's bring that back to 15. And then you had one right at the bottom here, kind of like more in the middle. The middle ones I don't really like too much because they work, but they kind of they'll fail more likely to fail. So we had this one right at the top. If I drag that over, that's where it originally rejected from. And then we had this one, which it rejected a few times, back down, back to kind of try to push, and then eventually broke through. And now it's kind of just stalled in that area again. So the next way I would do it then, because this volume profile was drawn from the high to the low, right? So this would only make sense if price is below it and coming up into the gap, right? If you've already passed the gap, then what we need to now measure for, because since we're going down, where it could potentially reject back up, I need to now measure the volume profile from the low to the high, right? And then I can kind of figure out where the next gap is. So there was one gap here, which again, a few days ago, it kind of went back down, went back up to this one. And then there's another one here, which it's just kind of broken through by the looks of it. Have a quick look. Yeah, so we've just broken through it. It's a bit of consolidation. And now it's coming back from the other side. So potentially, this could be still a good time to short the market, potentially. But of course, oil is so based on news where, I mean, it respects it pretty well, but it is very, considering what's happening in the world right now, it's going to be very news-based. So naturally, it can just, you know, something might happen and boom, this becomes irrelevant. You know, it will just fly. So let's take a look at gold real quick. I do want to have a quick look at gold. I haven't looked at gold in quite a while. Just delete all these drawings. Gold is looking quite choppy as a whole. We've had a really nice trend. I mean, this is a technical analysis person's dream, right? Look at this trend line. Like, people who love trend lines, they would love that, wouldn't they? I mean, that's gold for them. I mean, I personally don't trade trend lines, but for someone who is, they would really like that. In terms of gold, though, there hasn't really been a great leg up. The last great leg up, I'd say, was here, which we can measure. That was the most extreme gap you want to always take as the best possible. There's loads of them, actually. So you got one right here, which it has yet to touch. So that will definitely be one where I could just enter pretty much blindly. If price just dips into that, I'll set an alert near it. Pretty much you can almost do what's it called? Like a limit order. You just wouldn't know where to target yet. You wouldn't know to take profit. You'll know where the stop loss is, but you wouldn't know where the TP would be just yet, because you need to let it come down and then you can figure out where the TP is. Got another gap right here, which it touched a while ago and then pushed all the way back up. And then you had another one here, another one here, another one here, but these are all quite high up in the middle, so they just kind of blew right through. You're always looking for the most extreme one. The furthest one away will generally be pretty good. Got kind of a leg up here, but nothing too special. And the most extreme gap would be this one, but I wouldn't be surprised if that one breaks. It's been tested once there. We're currently in a small gap right now, but I would say that's pretty much been filled now. That kind of rejected back then. It's kind of rejecting a bit now, but I wouldn't be surprised if that breaks and we get like a breakdown potentially into this zone, back up, and then maybe fall down lower, or it could hold and keep going up. I mean, gold hasn't really dropped in a while, has it? It's been a long time since gold has really had quite a sharp drop. So to be fair, I wouldn't be surprised if these areas hold with gold. But apart from that, I don't really see anything too special with gold right now, unless you got intraday scalps, and then you're just looking for like, I really don't like that volume profile. It's very meh, but that would be the lowest point right here, which earlier in the day it did tap into, smallest gap, came back down, kind of getting to it, but it doesn't look, I don't know, it doesn't look that great. I wouldn't be surprised if it blows through that. There's no like real obvious nice.
Yeah, I've been real careful with gold ever since that stop out. What was that? 2 weeks ago. I've been real careful with it because it's been acting up.
Yeah, absolutely. You have to be. I mean, it hasn't really moved much today. It's kind of been pretty sideways. So actually, that wouldn't be a bad trade if it touches that. Yeah. It might be worth shorting it actually. So I'm going to set an alert there. It might actually do it. Wouldn't be terrible. And then you can have like a really short stop, really tight. So like, you know, and then either back to the point of control, that's over a 1-to-1, or maybe back down to these lows again, potentially. So there could actually be a trade there. If it just touches that area, I'll be quite happy actually to jump in probably. But yeah. Do you guys want to show anything? Is there anything you want to display?
For me, I'm still waiting. I'm looking at the NQ. I'm waiting for the 22,443.
Silver yesterday, it wasn't a bad trade at all. Yeah, let me see if I can share this. Hang on. Do you guys see my screen?
Give it a second. I have clicked it. It's just, there we go. Yep, now we can.
Okay. Sweet. All right, so this is gold yesterday. Check this out. So I'm showing my so this was yesterday. I actually took 2 positions on it. My opening price yesterday, one of them was at 35.86. So I took this literally right here, somewhere around here. This was short. And then my second position was killer. I got it in at 94. I waited for a small pullback. And this is why I always like to split my positions up. So the second position was at 35.94. And that is right here. Right somewhere around here. So literally, let's see, this position came in as soon as this closed, shorted it. And this hit TP so fast, it was ridiculously fast. What is this? This one's okay. Let's see what my closing price was. It was 45, so 35.45. Yeah, so somewhere like right here. As you can see, this literally once this candle closed, both these positions hit TP in less than 1 hour. Like it was super quick. So same as always, same market structure as I always point out. Right, we had our funny M top here. We couldn't touch this. All right, 1350 cross, we couldn't touch it. Not the level 1 move because price had already touched the 200. But my next move that I was looking for, of course, was this M off this 200. Now this is a funny quasi looking M, right? But it did give it to you. It was sideways. And the main thing that clues you in that this was dropping for me was this candle close below this price, right? So if I take all of this off, the fact that the candle closed, this was the main part here because we got the first, because like I always draw, right? When it's a sideways M like this, you need price to close below this level right here, which is exactly what this one did, right? So as soon as it closed below this, which is right here, this candle closed below it. So I was waiting for that small pullback, smacked it really good. This hit TP so fast, a part of me was shocked. I was shocked a little bit about it. Yeah, this thing hit it really, really quick. Talking about it maybe, let's see. If I open this position at 45, oh wait, open it at 86 at 903, right? And it closed. I moved it to TP. Well, I took some partials off about 45 minutes later. And then as you see, this one actually closed at 45. So this literally hit TP in literally 45 minutes, less than an hour. Both of these. Both positions hit take profit in 45 minutes.
That's awesome, man.
So yeah, silver was nice, but I didn't really have too much on gold. Yeah. Gold was a little funky. I was looking at it to take. As you can see, it kind of made the same move a little bit, right? We got this 1350 cross here. Then we had this 5200 cross here, right? So we're looking for the M move, but this didn't really, I didn't take this trade. I don't know why. Oh, I should go ahead and take this off. I didn't take this trade because it just wasn't right. We had outside the band over here on the TDI. This one barely made it, but I didn't like this second leg here. Like we had this first leg over here. It kind of came up, made the move like this. And this second one came up. Theoretically, you could have took it right here, but this was super late in the day. This happened at 5 o'clock. And who's about to take a trade at 5 o'clock?
Yeah.
So this didn't work. It worked out, obviously, but you couldn't have actually entered into this. So this was technically a pass. But that's why I say if you can't see it on one pair, makes you look at the other one. Silver did it, right? This actually gave you 1 for 1.5 if you could have took this, right? And then silver gave you, silver gave you the actual full move. So you grab this here. Yeah, this one was much, much nicer. And the TP again was at 40, 45. Yeah, so somewhere right here. So only a 1 for 1 on this one. Not as rewarding as the 1 for 1.5, but that one didn't set up. That one set up at 5 or confirmed at 5, and as you see, this one confirmed at 8. All right, so big difference. But yeah, I didn't take any trades on Monday. I actually was away Monday and Tuesday. I was had some personal stuff to handle at the immigration office down here. I had to renew my family's residency card, so it takes all day. Like you're literally there all day. So I wasn't here Monday or Tuesday, but I did see this before I left, so I was able to grab this one.
Stuff like that takes forever.
It does. I'm telling you, we got there at 9. Man, we got there at 9 in the morning. We literally didn't leave until 2:30 in the afternoon. So you're there all day. Yeah. So my markup on GU, as you can see, this one is GU to me has been acting really funny lately. It's just haven't been really given the cleanest of setups. But since we do have this fresh 5200 cross, my next move would be to look for obviously the M structure off this 200 market baseline going below the static for that reload. Right, this actually might happen this week. We'll see. So that for that reload, and then taking this bad boy long, obviously to the ADR high, can probably get you something like this. Nice 2 for 1, not bad at all. I would definitely take this if it sets up. So nothing on GU as of yet. I'll be looking out for that. And then GJ is more or less the same. See, this is that move when I say it's very weird when it does do this. And this is what I call an outlier, because remember, after the 5200 cross, the next move you're looking for is to bounce off the 200. But as you can see in this particular example, they gave the move off of the 50 EMA, which is not right. Even though this set up and it went, I would never take this after the 5200 cross. To me, this is a hard no. Now, this did go, but this only goes about 20% of the time, right? And I want to be on the opposite side where it goes 80% of the time. Because as I always say, once this 5200 cross, you're looking for the move to happen like this. And then go. So there was no move off the 200. And if you look here, you can see that the market baseline, yes, it went above the static above, but we needed to go below for the reload, and it never did that. Right, so this was a pass, a super pass. This should have did something like that for the reload. Right, I would have took it if it did that, but after the 5,200 crosses, I won't take the move off the 50 because this doesn't work out too often, and when it does, it's always like, oh well, they happen to throw a curveball today. But I tell traders all the time, don't get wrapped up in this because yeah, it went this time. Don't think that, oh, I can take it off the 50 and the 200. No, you can't, because this will jam you up more times than not. So this was nothing to me. The only other move that to me was kind of close that I still have an alert set for is GF. This thing did not go. It was supposed, I can't say supposed to, but I was looking for it to come down and close below here, right? I still got the alert set up because we had this 1350 cross. Once that 1350 cross, I'm expecting price to run down, hit this 50, and then drop. But as you see, that did not happen. So this was a pass for me today. And that's really, really it. Now, what they could do is they still could make this move, but give it 2 legs, right? Like how we came up one here, and then drop. It could do something like this. So I'm gonna still keep this alert here, and I'm gonna be ready for it just in case it does. But that was really it. I did see NU, and I saw AU as well, which I got alert set for it too. But as you see, same exact thing. This did not work. This might set up in Asia, right? This actually might set up in Asia. We got our 5,200 cross. We got our leg 1, leg 2, kind of making it like a third leg now. But yeah, I will be expecting this to drop here. And if it does, obviously, you see I got my alert getting set up, was already set up to take advantage of it if it does. This one is nice because we have outside the band over here. This is inside the band, and we already have the reload happening. Right, so it's only missing really one thing, is the close below. Now there's one caveat to this setup, is theoretically you wouldn't want to take this when it closes here because this 800 EMA is sitting right there. So I would really want to take this once it closed below this 800 EMA, excuse me, because I don't want it to bounce off of it and then run the other way. So we'll end up taking a move that looks more like this. So again, I want it to close below this 800 EMA. So yeah, be looking for something like that on NU. And then lastly is, for me, is AU. I think AU looks just like NU. Yep. So yeah, it does. Same exact thing. I really want price to close below this 800 EMA, right? And then we actually got to scoot this stop loss above that first leg. And let's scoot this up just a little bit. Yeah, so both of them looking like a 1 for risking $1, make $1.30. Not too bad. Same exact thing. You got outside the band over here. This next one's inside the band, and the reload is already happening. So we're good to go on that as well. And yeah, that is pretty much it. I didn't really see too much others. I say I'm really just getting back in the seat for this week. Then we had that meeting this morning, so I didn't get my full glimpse of the market how I would normally do. But I think that was about it. And it was one more, AUD, NZD. So yeah, this could possibly set up in Asia too. And I like this because it's kind of giving us, why has it got 2 alerts on here? I don't know why it's 2 of them on here. Yeah, okay, so this is giving us kind of the same exact thing, right? We got the 5,200 cross, and we know that this is, next move is that pattern off the 200 EMA, right? So I'm looking for, this looks like this could end up being a like a head and shoulders pattern or something. You know, maybe something like this. Close above, right? I'll be interested in it then. But we have to move this down a little bit. Yeah. All right. So actually, this might not be in play. For the simple fact that one, just how I said on the other two, on NU and AU, we want price to close above this 800 EMA, which is this blue one once again. We really don't want to take it before that because it could easily bounce off of it and go the other way with us in it. And then also, as you can see, this one's risking $1 to make 92 cents. Not really feeling that. Even though it's close, you might get like a small pullback, maybe. If you got in and let's say it pulled back to the 800, you would definitely have to wait, like once it closed. But yeah, other than that, a little bit risky. And on top of it, you would want this to set up in Asia, right? Because this is two Asia pairs. So I wouldn't take this setup outside of Asia. And even if this does set up and does pull back to the 800 EMA and the R to R makes sense, I still wouldn't put my full position on it because I don't put my full position on Asia setups. It's always a half because the volume is way too low. So I tend to just stay away from it altogether. Or if it's pristine and I can like spot it how I'm doing now with this one, I'll just put half of it on just to be safe. But yeah, we even have the reload on this one already happening too, right? So this is good to go as well. And yeah, guys, that was pretty much it for me. So far, I literally only took one trade, which was that quick one on silver. And that's really it. So yeah, that's pretty much it for me, guys.
Nice. The ES just broke the low of the day.
Yeah. Like I took a buy and it stopped me straight away.
Oh really?
Yeah. Like not even a second.
I missed a potential buy.
What?
Lining up, I was like, it jumped. So like what I explained earlier, there's 4 different trade setups, right? So we got the one where it breaks this area, comes back into it, retests it, and then I can short it. Or the one where it goes into this area and I can just buy it straight up to here. And it did it so quick. It dropped like instantly. But now we're coming back to retest. So the other trade is now technically in place. And now I've got to short it soon. But the trade was, well, it would have been done now. You would have hit TP almost. But it happened so quick, I didn't have time. Like there, from there to there, boom. That would have been it. Buy, get out. That sometimes happens. It's just too quick, the market. So what I want to see is it come into this area again, retest it, and then I got a short lined up. So I've got it on Go charting as well. When I get it into here, I can short it. Drop to the 1 minute. Man, that happened quick. Yeah, just boom, boom. Instant.
I have similar area where you have the 6,133. I have also demand there, so we'll see.
All right, here we go. We're getting there. We're getting there. All right, getting ready to potentially buy it. I just want to get that confirmation those sellers are coming in. This would be a lovely. I just wanted to touch into this zone. Just come on, go up. Come on, just a little bit. No, don't go down. Go up. Come on, buddy. Go up. Just a little bit more. Up. Come on. Come on.
Do it. You can do it.
I touched it and Go charting. Oh, I don't know which one to believe now. Is Go charting correct? Is TradingView correct? Which one is right? All right, we've got 68 at the top, 118, 50. I don't know. I don't know. Two conflicting things. All right, we've got 182. No, it's not ready to short yet because they're struggling to break. I'm gonna let it get properly in that zone. Don't jump the gun on it. It's not valid unless it's in there. It has to go. There we go. There we go. All right. Quickly look. So we've got 200, 300 at top, 400. Lots of buyers. They're dropping. I'm happy. We're in. Okay. All right. We're in, and we're going to go back down to the lows. Probably not right to the low, but somewhere near there. And my stop will be just above that kind of somewhere there. Oh man, the spread's huge. Maybe I need to account for the spread a little bit.
Yeah.
How many points is that? 9, so 2. It looks like the buyers might actually break through this area. They're still in it. 370. What's the depth of market show me? I want to see them get trapped now at the top there.
Yeah, this 370. Yeah.
If we start going below it, then I'll be. I don't like all that volume trapped on the sell side. All right, the last hope is the 800 can defend it. Wait a minute, what's the cumulative delta saying? 1.7, and it dropped to 2.5. All right, so a lot of people got out.
Yeah.
I'll let it roll.
Volume.
I'll let it roll. Otherwise, that is the area. Then there is, okay, if it breaks this area, then I can wait for it to, again, same playbook. Come out of this area, come back into it, and then I can buy it. So there's a trade regardless of what happens. You just have to recognize when you're wrong and quickly switch your bias. I think in this case, most likely I'm wrong. I think that area there is holding, and this is going to blow right through. But we'll see. I don't know. It's hard to know. It's hard to tell. It's dead in the middle. It's kind of a bit. Get there. All right. I'll let it. It will either stop me out, and then I can jump back in for a buy, or it goes my way. One or the other. I don't like what Go Charting is showing though, because it's broken the area on Go Charting, but I don't know how accurate that area is. It's kind of hard to tell.
Could you check Sam the 5 minutes? No, we are in the 5 minutes. Yeah.
Mm-hmm.
Yeah, those big cluster at the top. So we have what, 2 minutes left?
Yeah, I want to see it break down.
Minute. Yeah.
But I don't like the big clusters also on the sell side, right at the bottom here. I think there could be a bit of a reaction. I would hope that it does another double, like a double bottom type thing.
Mm-hmm, mm-hmm.
I don't want it to be a V-shaped reversal. I'd rather it come back down, do you know what I mean? Reject again and then make its way back up. That's fine. Because that can still allow me to trade the reaction. But if we just start blowing right through, then that's very annoying. It is definitely stopped. There is,
I took a buy, but the stop loss is really tight.
Why, Aymane? Why are you doing the opposite to me? But I think you might be right on this one. I am expecting the reaction should be a bit more.
But if we will go create a double bottom, I will be stopped out. Okay, I will share just quickly the entry.
Yeah. Okay, you're up. Oh, Michael was out. Sorry.
Yeah, so like you mentioned, Sam, I have also a demand right here. It's 15 and 30-minute demand. You can see this candle. We took out the lows, close green. We had continuation. We tested multiple times. So and then this quick move to the downside, for me, like you said, maybe those sellers here, they exit. So, and if you check the volume, like there is high volume in the low of this candle, on this candle, sorry. You can see here like 6,700 something. Now what I want is straight push, because we had this 92 at the top. Oh, it's pushing.
Yeah, I'm out. I got stopped out. So now I'm waiting for it to pull back so I can buy it.
And the entry is similar also. Like you see this candle, Sam, took this previous low, took liquidity, closed green, continuation, retest to take out those lows. So those highs, sorry. Yeah, but overall for now, like we are bearish. Like yeah, maybe we come on.
It's not coming back. Come on. Looking very good.
How many points? 4. Come on.
It will hit it. It will hit it.
Yeah.
Whoa.
It will hit it.
And
almost.
And, come on. Come on.
Just hold. Oh no!
How many points? Like 1.5. 1 point.
So close.
It will do it. It will do it.
Yeah.
I wouldn't blame you if you decide to get out.
Come on. Let's wait. We will wait. We will wait.
Hold it.
We have still this 995 at the top. Yes, we are still bearish. We had this big absorption here for buyers. Push down. Yeah. That's it, I think.
That is the most annoying thing ever. Are you at break even yet? Oh no, you're not.
Not yet.
No, just hold it. At this point, you need to just hold it now. At this point.
This is
What the hell?
This is funny.
Nah. Oh wait, mate. This could be a position for me to buy. This is okay. I'm buying. Actually, 1 minute. I need to double check this. I can't just jump in. No, not yet. I am buying in 3, 2. There's big clusters at the top as well for the buyers.
Yes.
But I'm going to stick to my original plan. I will stick to it. What happened with yours?
What do you think, Sam?
Did it get stopped out?
Stops out 1 point. 1.5.
What? You gotta be kidding me.
Yeah, 1.5. Thank you. Now it's
Nah. That's not right.
Yeah.
That is not right. By the way, I bought the market. Let me just quickly show. So, exactly again, same idea. We broke through the zone. We've come back from the other side now, theoretically, and it's rare if it fails twice in a row on both sides. the trade is now this. All right. That is the trade.
I don't know. I'm liking sales on this.
It should theoretically work. We're kind of just floating around in that area. I don't know, man. This is a weird one. I feel like this area has been filled a long time ago because it's just not reacting at all to it anymore. Let me get rid of this. Because the footprint is telling me big clusters.
Yep. Big cluster, like there is some big buyers here that they were trapped. You see?
Yeah,
Mm-hmm.
we're breaking it. Okay, got some clusters here. As long as it doesn't break it. If it breaks it, I'm getting out instantly. There's no ifs or buts. And then I've got to reevaluate because I think I've got my zone wrong. The only thing I can think of then is the zone that's been well and truly filled because it is a zone from yesterday. If I was to draw it,
maybe we should stick to the original plan, like this zone that you have lower, double bottom.
Yeah.
It will come back again, create a double bottom.
If I have a look, now the zone is still technically active. Oh no, the zone has been filled. Yeah. Sorry, my bad. All right, so it's no longer a gap. If I move it over all the way to the volume, this is the true zone, and that's the one it rejected from. So this middle zone that I'm trading right now, it's no longer. It's been filled a long time ago. It's no longer a gap anymore. So it means nothing. Which I kind of suspected now after a while, just because it's not respecting it in any way. It's just kind of willy-nilly. It's like it doesn't exist. So you have to get out if that's the case. The only zone that matters, I can get rid of this zone, is this one at the bottom.
I'm gonna take it.
Sorry? Michael?
I'm gonna take a small trade on NQ shorts. I'm liking it. I'm liking it a lot, actually.
If you want to pull up
I'm gonna try to get it really quick. Yeah, let's see. Let me get this around right here. Okay, cool. It's around, stops right above here, 22,250. Yeah, somewhere around there. Let's try to get this, which should be around 22,100. Yeah, 22,100. Not sure why I'm saying that. 22,100. 22,100. Wow. Wait, is this right? I think it is. Let me see. Dang, Aymane, I think what she I see what she's saying. This would be a $400 move. Let me see. 22,250. Let's say 22,250. Like, this does not seem right. 22,255.
We've got a question from Blandy. They ask, do you ever wait for candle closures with the new 1 hour coming up? Don't you look for a top wick first, excuse me, then trade the candle flip bearish?
Kind of like this area here, like a little bit.
Yeah. I think when there's like a new hour coming up or like a significant time zone, then I do like to look how it closes, but it doesn't make like, it doesn't have that much emphasis for me. I know, Aymane, you use candle closures a bit more than I do. Yeah.
If I understand well, like I use what he said. Sometimes I wait for the closure, wait for the current candle, take the previous candle, and then let's say short it if it's going up. Yeah. Because for me, let's say liquidity is not just an equal high, equal lows, double top, double bottom, but liquidity is everywhere. And for me, like at the top or like the high or the low of the candles, there is also liquidity. So that's why I use it a lot. And for me, if you see some, like the way I draw the zones, and it's most of them like they took the previous candles high or low, and they flip. So for me, like even if when you check the footprint, you see like there is some buyers got trapped. For example, in this last 5 minutes candle, like we were green, and then we flip thread. So there was some buyers trapped. So the significance of this, the meaning of this candle, it's not just like we took the previous candle high or something, but also it's every time, like if you check this candle on the footprint, you will find that there was some buyers or seller traps at the top or bottom of the candle. So
yeah, 100%.
No, I like this. ES and Q look just alike, except
your screen's not up, by the way, Michael.
Oh yeah, I stopped sharing it.
Oh, okay.
I was just saying they look just alike. I like NQ on this one a little bit more because it's closer to the EMAs. That's about it though.
Gotcha.
Yeah.
All right, let me get up a screen then. So this is why you got to always triple check your trades sometimes. You can make silly mistakes, especially when you're trading with volume. If an area has been filled, an area has been filled. If it shows unfilled and it's from a previous day, it's good to draw it over to the current time to see where the true area is now. That was the mistake I made. This whole zone doesn't exist anymore, but I thought it was still in play when it wasn't. The true zone is this one down here. We had a really nice rejection to it, but it happened so quick we didn't get a chance to even jump in. But now we're just kind of dead in the middle. Just got to wait for something to go. There's two places where there's two trades that are still in play. If it comes back up to here, I'll definitely want to short it. If it comes down here, I potentially want to buy it, but only potentially, because we've had a reaction already. It's tested it once, had a reaction, but it wasn't all that, the reaction. And cumulative delta, we are still on the lower side. Yeah, I don't know. I don't know. I'll see when we get there. When price gets there, then I'll actually have to look at the footprint on this one. I can't just jump in based on price touching it. I'll have to actually look for a similar idea of trap people, volume being trapped near the bottom, because you can see it actually quite clearly on this short here. The buyers trapped right at the top here. Really, really good. And even there again, buyers trapped at the top. They're trapping buyers very, very, very well, actually.
Yeah. There is the whole day, like you see trapped buyers.
Yeah.
Yeah.
So with that in mind, probably not a good idea to buy anymore. But we'll see. We want to see heavy. Where is the biggest volume of the day? Okay, so that is quite interesting. So we had a really big spike in volume on that candle, that bearish candle that went all the way down and wicked kind of back up again. We had quite heavy volume. That could be the low of the day locked in, to be honest. Usually the low or the high of the day is one of the heaviest like volume candles. So it could be locked in. And the market is kind of just going sideways. Doesn't really know what it wants to do now. Okay, I'm going to treat that as the low of the day, locked in. And if we come back into it, in fact, I want to see now where... Okay, what I want to look for now is what was the cumulative delta near the bottom? So we had 2,500 to the sellers. And then it dropped all the way to 1,000 when it hit its peak at the top. And then back to 1.5 at the bottom here. So if there was 2,000 contracts there, 1,000 of them got cleared. Now 1.5. There is still sell aggression coming in, but the buy aggression is also there. It's very balanced right now. Okay, so the market's very, very balanced. In other words, it'll move sideways if it's balanced. All right, we just have to wait for one or the other to happen. It either has to go down here or up here. This could be the low of the day now. It might not be. Nothing is too clear right now. So this could be quite a boring one. I don't think it's going to get to one of these areas in time of this session. I think that's over. Did gold, though, however, ever get to that area? I swear. Oh, what's going on? Oh. Come on. Ah, oh, so close. So close. Almost triggered me in. How many points away from triggering me in? 7. All right. Well, that's annoying. So this is why I hate gold. It either overextends or underachieves. It can't just be normal. It can't just behave like a normal instrument behaves. It always has to do something special. It can never just be disciplined. I hate gold. I mean, what difference would it make if it just went up 7 extra points? Oh, gold. Yeah, I gotta wait.
You said it last week, though. That week that I got stopped out on gold. You said it. You said it that week that I got stopped out about just not trading gold.
Absolutely. We had. Robert wanted a question about volume profile yesterday. All right, Robert, let me get the screen up and read your question. So, fixed volume profile question. Are the buy and sell bars stacked? As in, say there was 100 sell and then 100 buys. Will it just overtake the red bar altogether? I think I know what you mean. So, all right. So, for example, are they stacked? As in, will it? I'm not entirely sure what he means, but essentially, the way it works, so you can actually add the numbers, values. Here you go. So you can see 10,063 buys and 12,013 or 12,130 sells. So it will. Is that what you mean? I'm not entirely sure. If you can clarify in the chat exactly what you mean.
Is he talking about like the footprint, like or the volume profile? Oh, fixed volume. Okay, because 100, like what is 100?
because this is the fixed range volume or the volume profile.
Mm-hmm.
If he's talking about the footprint, let's see what he says. Let me know if he types in the chat, because I can't see it at this moment in time. But essentially, it counts the total buys, total sells, and just puts them next to each other. It's not the delta, if that's what you're asking. You can have the delta. So you can do like total volume. This is just total volume, buys and sells put together, and then you can do delta as well, where you can just see the heavier colored part is the delta, and it kind of has the buy and sell volume profile kind of like faded in the background. But personally, I just like the up and down. To be honest, the total works just as well, because I'm not actually looking at which one's bigger or smaller. I'm looking at where the gaps are. So for me, it makes no difference. I hope that's answered the question.
There is two type. Like there is traders who trade like let's say the high volume nodes, not like they consider them like a support and resistance, and there is the low volume node. And to be honest, like for you, I think you are the second person I see using the low volume node as a support and resistance, and it really makes sense, because because they have to fill the
This is it. I mean, like high volume nodes, don't get me wrong, they have an impact in the market, but I would use it more as like take profit, right? Like here's high volume, right? And you can see that the market, when it does break away from it and it comes back in it can reject from the high volume. Absolutely. But generally speaking, the only reason this area right here is high volume is just because that's where it ranged all day. So generally speaking, when it gets back in there, it just starts ranging. A lot of the time, it will just start ranging at high volume.
Yeah. There is Robert said something, I think. Yeah. Okay. Oh man, for some reason my labels don't show, but it just puts them side by side on default settings. Oh, I had to zoom in. Okay, so he found it, because you need to zoom in to see the numbers.
Yeah. If you zoom out, you can't. It eventually disappears. Yeah. And then you go zoom in. I mean, personally, I wouldn't put too much emphasis on the numbers. Like I've gone over a million times. I've tried to see, does it make a difference if there's more buyers, more sellers? What? I couldn't see any correlation. The only correlation I could find was basically the most extreme nodes within the volume profile, the lowest and the highest ones. They have a reaction in the market. Everything in the middle, just kind of, I don't know. They really didn't do anything. So, and I've gone over that thousands of times, like back testing for years and years, and that was the only. And for me, the low volume just has better reaction. It's more like instant, quick, especially as a scalper. High volume nodes just kind of meh.
Yeah.
Because a lot of time, price will be trading within like high volume of a previous day, right? Like all this was high volume, right? So like you can see here what happened, right? We had a high volume here, price broke out, came back, and then it just kind of ranged again, kind of did nothing. But when you like single out like where the low volume is, like down here, right? When price got into it, instantly just like gets away from it. It wants to escape those areas, because that's where transactions just don't take place. So the market has to dart to wherever the orders are. And I mean, I to this day don't fully understand it myself, but
What
for some reason,
what's exactly like the low volume node? Or?
Yeah, like
why it stopped there?
I think what it is, the way I've kind of figured it out in my head, it's not so much to do with like transactional volume, but you got to realize like the volume profile is actually quite time based, right? So if the market, for example, if we have like this price level here, yeah, if the market spends 2 minutes in this area, imagine 2 minutes of volume being transacted in that area, right? Now, if the market only spends 10 seconds in that area, it's going to be low volume. It doesn't necessarily mean that people don't want to trade in that area. It's just the market hasn't been in that area for very long time, so the volume is going to be low. And I feel it's more to do with time rather than the volume itself, right? I think these areas, the reason, for example, this area was created as low volume, right? It's because you can kind of see what happened, right? Like the market just shot up on that candle.
That's what I want to say. When I was
gap.
learning the volume profile, like the low volume node is sort of acceleration, let's say. That's like when the price enter those areas, like it's like the price move faster. So like if we are going down and it arrived to that area, it continue going down. That's what that guy was explaining. But the way you trade with it, like it makes sense more because you wait, for example, for the break, the retest, and then you buy back.
Yeah, so I think it's just really like where price kind of jumped so quick. And generally price will jump quick if there was, like a big iceberg order or something. Do you know what I mean? Like being executed and it clears out multiple levels very fast on the depth of market, like just boom, just gaps it open. And that gap is kind of almost the after effect of a big order being placed. And that's why I think when it gets back in there, it has that reaction.
So the volume profile depend on the price or the time?
I think it's actually more time based. I think the way I use it, I think it's more time.
Okay.
Yeah.
For me, like when I was using it, it's more like depend on the price, like how many times, let's say, because you can draw the volume profile by yourself, like how many times the candle touched that specific price. You can count, and then you put big bar. This one it touched 6 times, a little bit smaller. So yeah. I was using also the shapes. So the L shape, P shape, I think P shape, L shape. No V shape. Yeah, it was more. It's quite interesting. Yeah, it's quite interesting, and it make it easier for you also to draw your support and resistance based on
Yeah, I mean, like even if you look at like this one here, I drew out, right? This is just a low volume node trapped between two heavier volume, right? Heavy volume, and this is like the kind of the center of it where the volume drops off, right? But if you just look at like this area here, you can kind of see where price has, stopped. So like even just by using your eyes, you can kind of figure out this is something important, and it lines up always with these gaps in the volume. So when I draw my areas, generally speaking, you can figure them out using just candles as well. It just speeds up the process of, because all I got to do is now just look where's the volume drop off and then draw the area, rather than kind of like trying to figure out, right, there was a stop there, and do you know what I mean? So it's a good tool just to kind of speed up the support and resistance areas, I think. And then I trade them just how you would always trade them, continuation or rejection. One or the other is going to be true. So, yeah.
Y'all got that on lock.
Like Sam say, good stuff.
Good stuff.
Good stuff. Yeah, so the market is not doing
y'all
much.
Can read that order flow and all that stuff real good.
Robert's got quite a few questions. He says, side by side. Oh, I had to zoom in. Okay, thanks. I just wanted to know what I'm looking at. Oh, this is all about. Yeah, it does seem that it moves past the low volume areas to the more volume areas, which makes sense. Yeah. I don't think, I don't know, markets can be hard to figure out. I mean, there's a lot of theory with the markets. I don't think there are certain things that are like absolutes and true, but there are a lot of theories as well. And look, as long as your theory is like logical and it's proven itself multiple times, then whether you believe it's done by the phases of the moon or something else doesn't really matter. Do you know what I mean? Like, if it works, it works.
But this is the reality. Yeah, if it works for you and you test it, you have data and it works, you make money from it. Good.
Have you guys used a moon indicator? You think
Like
I'm joking, right?
Half moon. No, I saw it. I saw it on TradingView. I think there is an indicator.
I'm just going to go to any. I'm just going to clear a chart. This is Aussie CAD. All right, nice clean empty chart. We're going to go to
Half moon.
Here we go. Moon phases. All right. So what have we got here? All right, what does that mean? That's a full moon, or?
Yeah, I think full moon. We should.
Is it full moon today? That's still light out. I can't tell. But wait a minute. Let's see. Moon phases. New moon. Okay. Oh, that's a new moon. All right. Above bar. Oh, okay. So you can do a difference. All right. Okay. Full moon. We want a flag below the bar. All right. Cool. Oh yeah. Of course. This is like once a month it happens, doesn't it? So gonna have to use. Let me just get rid of all these drawings. Here we go. So these are all new moons. Where's the full moon, man? Should be showing me a full moon as well, shouldn't it?
What in the sorcery is
no
this?
idea. Inputs. Oh, maybe the color's wrong.
You should change the color.
Here we go. All right. So these are different. Okay. So when there's a full moon, you want to be buying, right? And then on the new moon, you want to get out. Then you want to buy and get out. Buy. Oh, you'd be very profitable.
Yeah, but you shouldn't
buy,
use stop.
Get out, buy out, buy out. Holy crap! Buy. Oh my god, this has had like buy out, buy out. It still hasn't failed. We've gone back all the way to September 2024, and it still hasn't failed a single trade. Buy out. Oh, here's the first losing trade, ever so slightly. But then look, buy out, buy out. Buy out. Oh, that called it perfectly. Buy out. Holy
Sam,
crap!
This is much,
What's going on?
This is much better than order flow, Sam. It's easy. Just open the window, check.
Have you ever had? Oh my god, this is insane. Are you guys seeing this? It hasn't failed once. What is going on?
This has to be because it's
no,
back. It has to be. It's no way. I would like to see this work out in the future.
Guys, I'm not even joking right now. I've gone back to 2022 and it failed once. Oh, twice. Here we go. It was the second fail. This is insane. We've had 2 losses in going back all the way to 2021. Third loss right here. Break even. Oh, that would have been a great win. Look at that. Oh, 4th loss. I don't know, guys. I'm becoming a moon trader, I think. I mean, this is insane. And these are monthly trades, right? Like this is half a month. So you'd be up 85 pips there. Would have bought like here. You'd only be up 23 pips on that one. But this one, look at this. Been up like 214 pips. There, you would have broke even, maybe a bit of a loss. Again. Oh, man, this is insane. Should we try it on gold?
Yeah. Let's see gold.
Okay, in gold, you just have to flip it the other way. So gold, it works, but you just have to do the opposite. Oh no, wait a minute. What's going on? If I'm moving the chart here, it seems to...
Not surprising.
Oh. I don't think it does work. I think I just had the
What in the world?
It's moving the signals.
Guys, the moon is moving.
What is happening right now?
I don't know, man. I don't know. But I'm becoming a moon trader. Actually, it would have worked quite well on gold. Would have lost there and lost there. But you would have just bought recent. No, you would have got out here. Yeah, you buy at the flag, get out at the circle. Yeah, it would have worked fine. Look at that. You would have some great trades. You don't even need a stop loss. Well, guys, I'm going to be getting a Lamborghini soon.
All right, I'm about
trading
to
the moon
close
cycles.
this I'm about to close this NQ trade.
You want to put up your screen?
Let me see. Yeah, I'm gonna go ahead and close this. It got me just sitting here. When I saw this break below, this is like a candlestick pattern more than anything. But when I saw this candle break below all of this structure for it to pull back up and drop, that's what I thought would have been the move to this 200. And also market baseline is pointing down too. Crazy thing is, this is going to end up doing exactly that as soon as I close this trade. I'm going to close it anyway.
That's typical.
I don't want no drama. All right, so we out of that bad boy. Get me out of there. Come on. Why is this thing not closing?
I think there's some internet issues.
Oh, okay.
There you go.
I don't know what's going on today. All right, we out of there. Took a small hit. Yeah.
Nice stuff.
Just have to get out of that.
Oh, well.
Yeah.
So who's going to join me as a moon trader?
What's going on?
Definitely, Sam. No, I'm with you. I think the bully accounts will become the moon accounts.
I think that's a good idea. That's what Robert said. He goes, okay, I'll use one of my accounts for that.
Yeah.
Hey, you never know. You never know. I mean, do full moons affect people? I think there are some statistics that say like there's more like car crashes or something on a full moon, or I don't know, something like that.
No, that wins for sure.
So who knows? Maybe there is something there. Will it affect the markets? Maybe.
Yeah.
I don't know. Maybe maybe not just the moon. Maybe we've got to track every planet. You know, we're talking Saturn, Jupiter, Venus, Mars, track them all, and kind of just build like the ultimate indicator that just tells you exactly when to buy and sell based on the planet's positions.
All right. So you shouldn't have any issues.
Yeah. Tomorrow we have a lot of red folder news. US durable goods, initial jobless claims, US GDP. The good news for us, Michael, is there is, I think, there is US pending home sales at 10 a.m. inside the session. So most of the red folder news are at 8:30 a.m. But there is one which is this US pending home sales. It's at 10 a.m. Eastern time. So similar like today. Yeah.
Yeah.
The market conditions are a little bit changing. Less volatility, in my opinion. Like the ATR is low. I have to wait more for my trades to plays out. But yeah, we will adapt, and we had a good day today.
Absolutely. Yeah, I had a good day as well, so I'm all happy. But guys, at this time, great session as always. I think I'm with you guys tomorrow again.
Right.
Maybe not. We'll see. But yeah, have a good evening.
Yeah.
To everyone watching as well, Robert, and to everyone else, thank you guys for tuning in. Tune in tomorrow.
I think today and Friday.
Definitely.
All
right, guys.
See you Friday, Sam.
Have a good one. Take care.